US stock live trading challenge. Do you think I can make $1 million from $4,000? The first week's profit? 4 times. This time, I'm using all my income from doing social media for half a year, a total of $4,000. Behind this seemingly small number, I'm betting my record as a former Wall Street trader and my dignity. The $1 million goal is an oath. If I can't achieve a 250 times return, I'm just an overconfident idiot. There will be no recharges or scripts. I will record every bloody battle I have in the market. Actually, I don't need your blessings either. The market is never gentle with anyone. Luck is the humility of the strong. And an excuse for the weak, but if you still want to bless me, then wish that I, on the edge of madness and sanity, do not stumble. Wish that when everyone thinks I should throw in the towel, I can still pull the trigger. The first week of live trading begins, aiming for a new world. On May 10th, that weekend, China and the US didn't reach an agreement. Tariffs were reduced to 10%. I thought it would be good for Nvidia. I used the $4,000 and bought the Nvidia 122 call on Monday. The stock price was 120 when I bought. On Tuesday, Trump went to the Middle East. Jensen Huang signed a big order with a Dubai tycoon. Nvidia rose to 129. My assets reached $10,000. Then on Wednesday, market sentiment was particularly good. A lot of people had FOMO and bought on the rise. Nvidia rose to 135. My assets reached $15,000. So taking advantage of the situation, making money was as easy as drinking water. In 3 days, our assets in US stocks tripled. At noon on Thursday, Nvidia rose to 136. A bunch of people in the group had FOMO and shouted that the goal for this week was 140. But I chose to sell when the crowd was excited. My assets also reached 16,000. I ended this week early. I kept my position empty on Friday. Then after the market closed on Friday, another thing happened. Moody's cut the US's credit rating, downgrading it from AAA to AA1. So there was a sharp drop after the market. But I tell you, this is not the first time. The last time the credit rating was lowered, the market also plummeted the next day. Nvidia fell to 131 after hours. So you could say our 136 take profit was very prescient, right? Let's finally summarize the performance of the first week of the Livestock Challenge. In the week of May 16th, we grew from 4,000 to 16,000 with a 400% return. The 1 million target has been completed by 1.6%. I'll leave the actual transaction sheet here. The profit mainly came from this NVDA 122 call. Bought at 345 and sold at 1455. Then some fans must ask how to operate next week. Can you take us along? My trading strategy for the next week for now is to keep a cash position on Monday. The reason is Nvidia hasn't broken through 136 and now it has fallen to 131 after hours. My judgment is that there is no buying power. A pullback is expected next Monday. I plan to consider buying after it's below 130. If there is a huge correction, I will buy into Nvidia. If not, I will continue to hold cash. I know some fans are very anxious and feel uncomfortable with an empty position. But don't worry, we need to be patient. Try to wait until the sword is drawn because that will be the day we conquer the market. Just like we made a 4 times profit on Monday. Remember this sentence: buy when no one cares and sell when it's bustling. The principle behind it is the same as what Buffett said. Be fearful when others are greedy and greedy when others are fearful. From 4,000 to 1 million is definitely a challenge for me, but the ship has already carried all the blessings and curses. It has set sail. In the near future, I'm confident that you will witness the birth of an epic. Ten challenges in the US stock market. Do you believe I can turn $4,000 into $1 million? In the second week of the trial, I had a 55% drawdown with a cumulative return of 1.75 times. In this episode's review, the focus is on self-reflection and self-critique. I'll explain in detail the reasons behind the decisions I made, what mistakes led to my losses, and how I plan to avoid them in the future. Also, at the end of the video, I'll answer some questions from the comments section to address everyone's concerns. Alright, let's first review this week's trades. On Monday, because Moody's downgraded the US credit rating last Friday, the market opened low but then moved higher. After the market stabilized, I chose to buy 35 contracts of the 132 strike call option for more recall on Monday, Wednesday, and Friday. The strong bullish candlestick on Monday that pushed 132 up to 135 made me believe the uptrend was strong. Since the upper Bollinger Band was at 139 and there were 94,000 contracts of the 140 call this week, based on the market maker's principle of crushing options, I determined the block case would take profit in the 137 to 139 range. I chose the 132 call for safety because as long as the stock price was above 136.5, I could make a profit. But in reality, I made a huge mistake. In last week's video, I mentioned my plan for this week. I said that I thought Nvidia might pull back this week, and I would consider entering below 130. If there was no pullback, I would stay out of the market. But I failed to align my actions with my intentions. On Monday, when I saw Nvidia rise from 132 to 135, I actually lowered my entry criteria, raising it from 130 to 132. Yet, I still chose to FOMO in at 135. To me, this mistake was a sin of arrogance. I didn't stick to my original plan. Entering the market recklessly meant I lost control over my actions in the market, and this was only the beginning of the nightmare this week. On Tuesday, the market opened with a crash, and the price didn't touch 135 again for the entire day. Watching the stock price drop, I was so anxious I could curl my toes into a 3-bedroom apartment. On Wednesday at 1 p.m., there was a U.S. Treasury auction. My expectations were the same as for April 17th. I thought demand would be stable and not impact the stock market, so I did not hedge. In the morning, everyone performed well, and the market kept rising. And before 1 o'clock, it reached the high point of 137. Once again, I felt like I had survived a disaster. But this time, while I was feeling smug, I also became even more greedy. Even though it had already reached the profit-taking range I had set, I set my sights on the E39 high, wanting to get rich in one go. But because of this, I lost my only chance to escape. At 1:20 p.m. on Wednesday during the U.S. Treasury auction, weak demand for 20-year bonds caused U.S. stocks to plunge. The price dropped straight from the 137 high back down to 133, and even touched 130 at the close. At that moment, I had actually already given up, and the only thing on my mind was cutting my losses. Greed made me swallow bitter consequences. On Thursday, the next day, since theta decay outweighed the chance for an upward move, I exited the position in a sorry state. Looking back, exiting in a sorry state on Thursday might have been my only right decision this week. On Friday, Trump imposed tariffs on the EU and Nvidia plunged, dropping to 129. My account was nearly wiped out, and I was close to failing the challenge and becoming a laughingstock. There was truly a fine line between the two outcomes. Next week, the market will be closed on Monday for Memorial Day, so there will only be 4 trading days. Nvidia's earnings report will be released after the market closes on Wednesday. One fact is that in the past 4 earnings reports, Nvidia exceeded expectations each time, but its stock price plunged after all 4 reports. So as for what will happen this time, let's just wait and see. So at the end of the video, I also want to answer some questions from fans. Well, the first question is, how did you manage to quadruple your capital like that? To put it simply, it's not exactly simple, but it's not that hard either. Basically, it's through options. Options and stocks are fundamentally related. While they offer higher returns, they also come with higher risks. So I don't recommend that everyone try to imitate this, especially beginners. The second question is, if you're so good at trading stocks, why do you still want to be a content creator? The reason is simple, it's just that I have a strong desire to share. And besides, what if I actually succeed in this challenge? US stock trading challenge. Do you believe I can turn $4,000 into $1 million? Week 3 returns. Ha ha! Back to square one! There were only 4 trading days this week. On Tuesday, the market opened high and I missed out, but this time I was determined not to chase the rally, so I stayed in cash, holding on to $7,200 in borrowed funds and waiting for Nvidia's earnings report on Wednesday. To be honest, Nvidia's earnings report was a bit unpredictable. Either a rise or a fall was possible. The logic for a rise is that in the previous 4 earnings reports, Nvidia's stock plummeted 4 times and I lost 4 times. What kind of gambler loses every single time? So this time, it's about time for it to go up. As for the logic behind a drop, in the previous 4 earnings reports, Nvidia beat expectations all 4 times, but the stock still crashed each time. This pattern might continue. In short, it's impossible to predict. Either outcome is possible. So on Wednesday, I decided to go with the logic that no gambler loses every time. Plus, I backtested Nvidia's stock performance after earnings in the past, and I found that every May, the stock has surged. That convinced me to go long on this May's earnings report. Right before the market closed, I bought Nvidia 600140 calls. At 4:30 p.m. on Wednesday, the exciting moment finally arrived. Nvidia's earnings report showed a 73% increase in performance, and after-hours trading saw the stock price shoot up close to 140. If only I could have a bit of gold and a bit of luck from my youth again. Over the past year, I went all in and went long on 4 earnings reports, and all 4 times the stock crashed. I failed 4 times, until today, I finally got it right once. We always go all in, always stay young at heart. But just as I was starting to feel happy, early Thursday morning, Nvidia opened high at 143. But then profit-taking kicked in, and the stock dropped from the high, falling all the way down without stopping. By the close on Friday, Nvidia had settled at 135. The IV crash after the earnings report instantly slashed my option prices in half, and my principal was knocked right back to square one, or back to the starting point of 4,000 again. Nvidia's stock nature means that most of its holders are paper hands. Whenever there's an earnings report, panic selling is inevitable. This pattern has been proven true in all of the last 4 earnings days. But you can't really blame them for lacking conviction. It's just human nature, I guess. Not everyone can have the same unwavering willpower as Poe, right? Let me say this. Next time Nvidia has an earnings report, not even a dog should bet on it. Let's sum up the 3rd week results of the US stock trading challenge. The account is back to the initial principal of 4,000 with a weekly return of minus 46% and a cumulative return of 0%. I'm done playing, give me my money back. My call option expires June 20th, so I haven't sold yet. Next week, I plan to keep holding until I break even. As long as I don't sell, it's not really a loss. Just kidding. There are still many positive semiconductor news stories next week. Over the weekend, US-China tariffs were postponed again, and Jensen Huang will meet leaders from the UK, Germany, France, and Belgium. Not long ago, his trip to the Middle East sent the stock price soaring, didn't it? Next week, Broadcom will release its earnings report. I think Wall Street now prefers Broadcom over Nvidia. The reason is that they feel they've already missed out on Nvidia and believe Broadcom's XPU market is growing faster than GPUs. But in reality, Broadcom's valuation is already higher than Nvidia's. Broadcom's forward P/E is 35, while Nvidia's is only 32. This premium shows that the market expects Broadcom's future growth rate to surpass Nvidia's. As for me, I'm also very optimistic about Broadcom. I believe that the semiconductor chip market will only get bigger in the future. Even though Nvidia is the leader, Broadcom, AMD, and Intel will all have their place. Also, this week, PLTR surged on Friday. The reason for this jump is that PLTR has built a good relationship with Trump and signed more contracts. If you're interested in PLTR and want to learn more, you can check out my very first self-media video, Trump Trades in the US Election. So aside from Nvidia, I'm also optimistic about the future development of PLTR and Tesla. I'm focusing on all 3, data centers, humanoid robots, and AI applications. Bitcoin's my long-term investment, while government bonds are for risk diversification. This is how my main portfolio is allocated for your reference. These are all individual stocks, held for the long term as value investments. My future targets for them are as follows. PLTR will go up to 150, Tesla will reach 400, Nvidia will also go up to 150, and Bitcoin will hit 200,000 in the long run. Even though I hit a setback this time, I'm still pretty confident. It's just like going back to square one. See you next week. US stock challenge? Do you believe I can turn $4,000 into $1 million? 4th week return, 67%, cumulative return, 67%. And if you've been following me, you should know that this week my position has always been Nvidia's 62140 call options, and that hasn't changed. I think the reason Nvidia performed the way it did this week was already answered on Friday, May 30th, when the stock dropped. I believe that because there were too many options contracts last week, there was a situation where market makers crushed the options on Friday. So this week, in theory, the pressure from options that was holding down the stock price disappeared, allowing the stock to move up. I am very confident in my understanding, and that's why I was willing to keep holding. And sticking to it brought rewards. Fortune favors the brave. This week, Nvidia rose from last Friday's close of 135 to 137.5, and on Tuesday it gapped up, surging from 137.1 all the way to 141. After 3 years of planning, we finally welcome Nvidia's triumphant return to the throne, reclaiming the top spot in market capitalization. On Thursday, it soared all the way to 143, even briefly touching 144. This shift in market sentiment actually has something to teach those with paper hands. Panic selling at every drop is rookie investor behavior. What you call cutting your losses is just giving your bloodstained shares to short sellers. True experts don't cut losses so easily. First up is Nvidia's own protege, a cloud computing provider I'd invested in. Back in April, I already introduced this company to everyone in the About group, and I've been following this stock all the way from $50 to its current price of $140. Let me tell you why this company has such a bright future. Because AI computing power is a fundamental need. In the industry chain, CoreWeave is downstream, renting out computing power and managing its distribution, while upstream you have data centers like Nvidia, integrating GPUs. Honestly, both of these should have taken off a long time ago. Seeing a 3 to 5-fold upside is actually pretty normal. When CoreWeave went public, it was only $40, and now it's already quadrupled. So why haven't Nvidia taken off yet? There are 2 reasons. First, its market cap is too big. As the company with the highest value in the world, it's hard for its stock price to double again.
Second, many investors hesitate to buy in. They have that retail investor mindset. So they think since Nvidia's already risen so much, it can't go higher. But that's the biggest mistake. Future demand for AI computing power will be 100 times what it is now, so who can really say? So why can't Nvidia's stock price go up 100 times? In my opinion, the whole market has some misunderstandings about Nvidia. I kind of feel like I'm the only sober one while everyone else is drunk. Maybe in this world, only Jensen Huang could truly understand me. We'd be like soulmates who appreciate each other's talents. After all, no one understands Nvidia better than I do. Now, the second dark horse is Circle, which just had its IPO this Thursday. The IPO price was $31, and it closed at $83 on the first day, a 167% increase. I actually predicted this before the IPO. This is the secret to wealth, and now my prediction has come true. Circle is the world's second largest stablecoin company and the #1 exchange in the crypto world. It collaborates with Coinbase, and this IPO was once considered the most anticipated IPO of 2025. So some people might ask, what is a stablecoin? A stablecoin is a type of cryptocurrency whose price is pegged to a stable asset, like USDC issued by Circle. Like the US dollar peg, 1 USDC equals $1. Stablecoins help reduce crypto price swings. This dark horse is actually a thoroughbred. That's all for our 4th week of live trading. As expiration years, are you excited to see our results? At the end of power and wealth, friendship cannot last. The more they once loved each other, the more they hate each other now. Disappointed in England? I've helped you on a lot. The Inflation Reduction Act was the final straw that broke this political relationship. Musk denounced it as disgusting, saying it ruined the future of electric vehicles and planted a hidden danger for the nation's finances. At the same time, the White House was no longer silent. Trump personally fired back, calling him an ungrateful madman. Threats soon followed. If you betray us, there will be no more government subsidies or contracts for you. But Musk refused to back down. He lashed out on social media, even throwing the early Epstein scandal into the fray. He didn't just leave Trump's circle, he ignited a firestorm. A direct confrontation, former allies, now political adversaries. A real-life drama about power, technology, loyalty, and betrayal is unfolding under the eyes of the world. In this battle, there are no winners, only fractures. As for what kind of tragedy will ultimately unfold, let's wait and see.
US Stock Challenge 18. Do you believe I can turn $4,000 into $1 million? Week 5 return 10.5%, cumulative return 78.5%. Before we do the review, let's break in with a quick news update. At 6 p.m. New York time on June 23rd, while recording this video, Trump unilaterally announced a ceasefire between Iran and Israel to the world on his social media platform. As a result, US stocks soared in after-hours trading. Here, I sincerely hope that this perhaps fragile consensus can become the starting point for melting the glacier of hatred. After all, the fate of humanity should not be tied to war and suspicion. Our goal should be world peace. I've been quite busy lately, so we've scheduled all of our live action videos from the past 2 weeks to be produced this week. As a little preview, after this live action video, we'll be launching a beginners series on the US stock market. We hope you'll tune in, and please let us know what topics you'd like to learn about. All right, let's get to the main topic. If you've watched my previous videos, you probably know that I've been holding on to my Nvidia call options with confidence. No matter how rough the waves get, I stay steady like a fisherman in his boat. But on June 13th, this Friday, the waves were too strong. A conflict broke out between Iran and Israel, and the US stock market was affected for no clear reason. My little boat was tossed in the storm, feeling lost and unsure of its direction. But if you think about it rationally, as long as the Strait of Hormuz isn't closed, what does the Iran-Israel conflict have to do with the US stock market? And what does it have to do with Nvidia? I really don't see any connection. It's all just emotional overreaction. So as long as you hold on, it'll come back sooner or later. Do you really think the market is always right? Anyone who tells you the market is always right is just talking nonsense. The market often makes mistakes, and then the market admits those mistakes and corrects them. When US stocks fell on Friday because of the Iran-Israel conflict, I made a judgment. It wasn't me who was wrong, it was the market. Sure enough, on Monday, June 16th, the market admitted its mistake and all the losses from Friday were recovered. The sword stands firm in desperate times, and green mountains defy fate like Mount Tai. From June 9th to 13th, Nvidia's stock price ranged from 140 to 145, peaking at 145 midweek and closing at 142. Our stock price is truly random and unpredictable. That's not true. There are always patterns. In fact, I, Abao, anticipated this. Some viewers may ask, why does the price keep moving sideways without breaking out? Let me, Abao, use 5 professional perspectives from Wall Street traders to explain why Nvidia stayed at 142 that week. Sideways movement, the first perspective is support and resistance levels. If we zoom out and take a longer-term view and draw a red dashed line at 143 looking back, we'll notice that the 2 points I've circled on this chart, one is right before the DeepSec release at the end of February. Nvidia's highest point was at 143, and the second red circle is the day after this earnings report when Nvidia's high again reached 143. We can see that 143 was the highest price point before and after these two major events, which means a lot of people got stuck holding shares at 143. 143 is the main point for big players to sell and take profits, and it's the highest point where retail investors are stuck. In a Bow's view, this makes 143 a key resistance level. Those stuck want to sell and exit, while big players who bought at the bottom want to cash out. With so many selling, it's hard for the stock price to break through 143. The second perspective is technical analysis. Now let's open Nvidia's candlestick chart. Look at the candlesticks in the red circle are Bow marked. You'll see Nvidia is already in the 140 to 145 range. It's been stuck at this resistance for over a week, and the upper band of the Bollinger Bands is at 143. The RSI indicator has also been in the overbought range between 60 and 70. All of this points to a sideways consolidation. Many viewers might be beginners, so here Abao will explain how I use and interpret these technical indicators. The first is the candlestick chart, which basically shows the historical price movements. When the candlestick chart stagnates and stays flat at 143, it indicates that there is not much upward momentum and there have not been many breakouts in the past either. The second is the Bollinger Bands. To put it simply, when the stock price touches the upper band of the Bollinger Bands, it usually pulls back a bit. The upper band generally acts as a resistance level during an uptrend, which is why the stock price is getting stuck at 143. The third is the RSI, which is an indicator specifically used to determine whether a stock is in an oversold or overbought range. An RSI reading on the higher side is generally considered to indicate an overbought condition, which means the stock price has already been pushed up to the sky. These three indicators all corroborate each other, showing that 143 is a strong resistance level, so the sideways movement is not surprising. The third perspective is order flow. By observing the order flow in the market, we can analyze the strength of buyers and sellers, determine where there are bold buy or sell actions, and thus seize the initiative ahead of others. In fact, most of the top high-frequency trading hedge funds on Wall Street use this very strategy. The only difference is they use quantitative high-frequency analysis much faster than the human brain, but the principle is the same. This Thursday, Abao saw Nvidia's order flow and found that at the price of 145, there were sell orders for 194,000 shares, far above normal volume. I just needed to see this information to know that 145 was unreachable. On Thursday, Nvidia touched 145 at the close, which was both the intraday and weekly high, and on Friday it dropped back to 142. This is how order flow is used. Abao made an accurate judgment by analyzing order flow. The fourth perspective on stock price movement is options. Nvidia's price is strongly influenced by options, as many investors go long, short, or hedge the stock by holding Nvidia options. If you watched Abao's earlier video on US stock options, you know each contract represents 100 shares. So options are like a 100 times amplifier, and the total position changes in the options market largely determine the price movement of Nvidia's underlying stock. Here we can see that when sorted by open interest from high to low among the top 9, there is only 1 put and 8 are calls. If we arrange them by strike price, the number of calls above 144 is much greater than the puts at the same strike. Some viewers may be impatient and ask, how do we interpret this? What does it mean? Let me explain. There are two main principles in options. First, the market maker's principle of killing options. Options with the highest open interest show the most people have bought them, but often these go to zero and become worthless. For example, here you see 80,000 contracts of the 150 call, 70,000 of the 145 call, 70,000 of the 146 call, 60,000 of the 137 put, and 60,000 of the 155 call. With the final closing price at 142 on Friday, all these options will expire worthless. This is the idea behind market makers killing options. The options with the most open interest are mostly held by retail investors, and in the end, the stock price moves so these options expire worthless. That's also why the stock price settled at 142, making all top 10 options go to zero. As for the second major principle, the gamma principle, we'll talk about that next time and won't get into it today. The fifth perspective is the position changes of hedge funds and institutions. Who are the biggest players in this market? Is it retail investors? Definitely not. It's the institutions. Investment banks like Goldman Sachs and hedge funds like Citadel are the real big players. 70% of Nvidia's stock is held by institutions. Since institutions are the biggest players, if we monitor their movements, can we predict how the stock price will change? If so, this problem is easy to solve. Abao has developed a bot that directly accesses the latest position changes of institutions like Goldman Sachs, Theta, and Citadel. You can also check the latest holdings of famous figures like Cathie Wood, Warren Buffett, and Nancy Pelosi with one click. I've also installed this bot in the US stock group so everyone can use it for free. By monitoring the positions of Citadel and Goldman Sachs, Abao discovered that they were previously the largest holders of Nvidia, but recently they've been selling off large amounts of Nvidia stock. Theta sold 79,000 shares. Nvidia's holding cost was 108. Goldman Sachs' largest sell-off was also Nvidia, recently selling 42,000 shares. These major players are dumping large amounts of Nvidia's stock. Considering this, the recent sideways stock price shows institutions are offloading at high levels. On Monday, June 13th, Nvidia surged to 146. Taking the opportunity, Abao cleared his account, raising it to $7,000. One Finance filled the media with news, publishing articles that Nvidia was about to hit a new high. Before the market closed on Friday, June 20th, Abao bought the Nvidia 711146 call at a market price of 3.6, jumping back in. Let's see what happens next. eShares 18 challenge. Do you believe I can turn $4,000 into $1 million? The sixth trade yielded a 129% return, with a cumulative return of 310%. Through this real trading series, we've gained a lot of new followers, so I want to emphasize once again, everyone, stay calm. This is my own personal challenge. It's best for you to just watch from the sidelines and enjoy the show. All right, let's start the review. Fans who watched the last video carefully all know that last Friday, which was June 20th, one of the 4 magical days of the year, I bought the Nvidia 711-146 call option right at the close. My cost was at 3.6, which means that on July 11th, 149.6 will be my break-even point. Once you understand what that means, you should also get what I was thinking at the time. I believed that 149.6 would be a safe price for Nvidia on July 11th. After the market closed on Monday, June 23rd, a tweet from Trump announcing peace talks between Iran and Israel kicked off a market rally. On Tuesday, June 24th, the S&P 500 rose by 1.1%, the Nasdaq went up by 1.4%, and Nvidia followed suit, reaching 147.9. My account also joined the peace bandwagon, reaching 9,800. This 146 call option is up 40%, so again, we've hit the jackpot. When my account dropped to 3.8 and now it's nearly 10,000, it's true, what doesn't kill me makes me stronger. I also analyzed Nvidia's options data for this week and found significant open interest in the 147 to 150 range. Since the stock price has climbed above 147.9, this suggests a gamma squeeze is likely this week, with the stock possibly surging quickly. 149. And just as I finished saying this before the market opened on Wednesday, Nvidia really did reach 149. So do you know why I was able to predict all of this? I've mentioned in previous videos that Nvidia's options play a huge role in determining the price of Nvidia stock. This Friday, there are a total of 400,000 call options concentrated in the price range of 147 to 155. If you were a market maker facing such a massive number of call options being bought by retail investors and institutions, and the stock price keeps climbing, what would you do? That's right, you would have to buy a large amount of the underlying stock to hedge your risk, which in turn pushes the stock price higher. And as the stock price rises, out-of-the-money options become in the money, causing gamma to increase sharply. So market makers need to accelerate their buying of even more shares to maintain their hedges, creating further buying pressure. This creates a vicious cycle of price increases and more buying, and this is essentially a financial war involving retail investors, institutions, and market makers all participating. But 149 was not the endpoint of this gamma squeeze. On Wednesday, June 25th, the stock price even reached a historic high of 154. I chose to take profits here. The 711146 COM 3.6 principal and 6.75 take profit account brought the total to 13,000. As Abao said, in the short term, the market is a voting machine for stock prices, but in the long term, it's a weighing machine, determining prices by company quality. Today, Abao fulfills this promise across time. With Nvidia and a new high of 154, our Abao roundtable wins again. People always ask me why trading stocks can be so exhilarating. Do you understand now? I took part in and led a war without gunfire and managed to walk away unscathed from this battle of wits. My heart is burning with passion because of it. We were born as underdogs, tasted the sharpest hunger, and in the end, pulled off a bloody comeback. If you've never tasted rust on a blade's edge, how could you understand this feeling? With no guide to the clouds, I climbed the mountaintop alone through snow. Zeus Nvidia opened at 155, and since big players closed positions, the largest number of options contracts is 109,000. These are the 155 puts expiring Friday. Following the gamma principle, About judged the stock price could see a gamma squeeze and break through 157 this week, so we bought 718 of the 155 calls. On Friday, June 27, the market moved as expected. A gamma squeeze pushed the price up to 157.5. About took profits, selling at 5.3 and cashing out at 6.7. The account hit a new high of 16,000. In a few weeks, my 4,000 quadrupled, and 100,000 now seems within reach. In ancient times, Zhao Zilong charged into Changban Slope 7 times alone to save his lord. Now on Wall Street, a Bao makes 7 in and out trades as Nvidia stock soars. Why do I win? My secret, always stay hungry, eyes full of passion. More than making money, what makes me happiest is, I'm not the only one in this. Besides NVDA, the second hottest topic this week has to be Circle. 2 weeks ago, if you watched Abba's live trading video, About already mentioned the soon-to-be listed Circle. On Monday, June 23rd, Circle also hit 297. 300 is a major milestone, and Abao always remembers, when others are fearful, I am greedy. When others are greedy, I am fearful. When everyone in the group was greedy, I sensed fear, so I called for taking profits, and this move sold at the highest point. When most people are consumed by greed, you must conquer your own nature, because only when the tide goes out do you see who's been swimming naked. The market is full of dead ends, and only a few see where others stop. In this market, the one you need to defeat is yourself. It's your own heart. Abao calls this week the value return week. All those overvalued bubbles and shady stocks like Tesla and Palantir have shown their true colors, and capital has flowed out of these bubbles in search of value investing. You could say, with one shock, everything comes to life. This is sector rotation, and this trend will continue moving forward. All the hype around those shady stocks will eventually die out, while value investing's the real way to win.
This guy wants to turn red in the face, have an epic battle with Red Pig, pogos with the bull, not the bear, and fights Red Pig. Even Guangong would nod in approval. I play the game, I own the fate. No, you all know my name time.
On Monday, June 30 at market open, Poe analyzed data from the big girls and found the chance of rising to 157.5 this week is 24.46%. Options calculations show the implied volatility range is 152 to 157.5. If it breaks 157.5, a gamma squeeze will occur, driving the stock price up. Based on this data, I made the judgment that there's a high probability the big girl will close above 157.5 this Thursday, and once it breaks through 157.5, with the help of the gamma squeeze effect, the stock price could approach 160. So early Monday morning, Poe bought the big girl 17,815 call at a cost of 6.2. This means that by July 18th, my break-even point is 161.2. My bullish logic for Nvidia is that I believe Nvidia's stock price has been undervalued over the past year. Even though it surged to 147 several times, it's been stuck around this level for about a year. But this time, as Nvidia breaks through to new highs, I believe it's finally time for the market to correct its year-long undervaluation of Nvidia's stock price. At the end of the Pirate's Road, destiny takes its course. When I reach the mountain's peak, I am the wind. Poe and Nvidia will reclaim everything that belongs to us. On Monday, Nvidia hit new highs, and by close, Poe's account reached 17,000. Midweek, early Tuesday, Trump criticized electric vehicles, causing Tesla to plunge and the Nasdaq to drop. Nvidia opened at 156.4 and closed at 153.09, marking a decline Tuesday. The drop was kept within a range of 1% to 3%. Many Oppose fans were really unsettled by this decline. Because of the leverage and options, seeing the unrealized losses in their accounts, they felt like this drop was a waterfall and panic started to spread. Here, Poe still wants to emphasize one thing. As an options holder, you need to be mentally prepared for large swings in your profits and losses. You should analyze the decline from a rational perspective rather than just staring at your account and making emotional decisions when you see unrealized losses. If you're this kind of person, you really need to train yourself to become desensitized. True experts, like Poe, are able to ignore short-term fluctuations and focus on value investing.
If you don't have a strong heart, then it's better to just buy good stocks, forget your password, and come back to check in 10 years. That will definitely be better than messing around with your own trades. If we rationally and objectively, without the benefit of hindsight, put ourselves in Tuesday's market and look at what kind of judgment you can make at that moment, first of all, among the three major indexes, the Dow Jones Index was rising from the opening bell. And on July 1st, the Dow was up 1% for the day. The increase was 400 points. Although the Nasdaq and S&P 500 were both down at the open, you should realize at this point that while tech stocks were under pressure, the large cap blue chips were holding up strong, indicating this was a healthy sector rotation. Secondly, there were still nearly 3 weeks left until the expiration date of this position, July 18. What makes you think that just because a stock is down today, it will keep falling in the future? The speculative nature of the market means that this kind of situation just doesn't exist. Besides, when it comes to Nvidia, the third point is that Nvidia had already gone up for 7 consecutive days before this, so you should always be mentally prepared for a technical pullback. A technical pullback is just a normal correction. Even with a little common sense, you know no stock goes up every day. For a company with strong fundamentals, a pullback paves the way for a stronger breakout. When the price soars, you'll regret not buying more at the lows, but when it drops back to those lows, you'll panic and be too scared to buy. All you end up doing is chasing highs and selling at lows. Maybe it's time to reflect on yourself, don't you think? If you had a Bao's perspective and understanding, would you still be this panicked? By Wednesday, tech stocks rebounded and recovered all losses from the previous day. Then, Wednesday night, the big and beautiful bill from the blonde guy passed, and on Thursday, a Bao's Bao Da shot up to 159.5, triggering the gamma squeeze that Bao mentioned in the last video. Market makers bought many shares, pushing the stock price higher. At this point, Bao took profits. I bought at 6.2 and sold at 6.85, earning 0.65 per share. My account reached a new high of 18,000. In our challenge to grow from 4,000 to 1 million, this is another step forward. I took all my profits on Thursday for 3 reasons. First, the gamma squeeze hit 160, which won't last. There's a good chance of a pullback within the day or next week, so I thought it was right to take profits at such a high point like 160. Second, the market closed at 1 p.m. Thursday and was closed Friday. With the long weekend, there would be 3.5 days of time decay, and theta decay would be significant. So I exited early to avoid time decay. Third, since July 9th marks the end of the 90-day tariff suspension, I see this as a potential risk, so I probably won't take any action until after Wednesday. In the stock market, only those who can endure loneliness and sharpen their skills for years can deliver a decisive blow and make a name for themselves in one battle. If you are impatient, don't rush. Take time to build patience. What makes me happiest is that this isn't just my victory, but a win for all Nvidia bulls at the Obao Roundtable. The credit isn't mine alone. I've succeeded, and so have the 5,000 members of our group. If you remember the video where Bao bought Nvidia and made the 3-year pact, 2 months ago at 96, I led our group to go all in. Now the stock is 159, a 65% return. In one move, we've shattered the stars, and my fate is written in the heavens and on earth. A legend is called a legend because there is only one. None came before and none will come after. My children are witnessing its birth with their own eyes. You are the witnesses. Fans who watched Abao's last video should know that July 9th was originally set as the 90-day deadline by the blonde guy, which brought a lot of uncertainty to the market. So Abao's original plan was to hold steady and keep an empty position. For those of you who get anxious and uncomfortable if you do not make a trade for even a day, Abao has a message for you here. Charging in with a full position can make you a warrior, but knowing when to stay out of the market is what makes you a general. We should be like cheetahs, waiting to pounce only when there's a clear entry signal. As Abao expected, on Monday, July 7th, the market was affected by trade tensions, and all 3 major stock indexes pulled back across the board. On Monday, it was no surprise that the King of Understanding pulled out his big move, extending the July 9th deadline to August 1st, which made the only uncertainty of the week disappear. With the fog cleared, Abo's finger was already on the trigger. We finally got a pretty good opportunity. The charge sounded and the battle began. After the market opened on Tuesday, July 8th, Abao bought into the 8160 call option for new to Chow at a cost of 2.9, with your scoring point at 162.9. Besides the market sentiment analysis I mentioned earlier, the most crucial reason for my decision was that I believe NUTA was about to break through 160, and there was not much time left below 160. I analyzed the options data for this week and found that the option with the highest open interest was the 7-Eleven. A round of calls totaling 105,000 contracts, which means there's a high probability the stock price will break through 160 and a gamma squeeze effect will push the price even higher. Once it breaks 160, it'll likely surge straight to 165. At the same time, Abao analyzed the order flow data and found that there were 180,000 sell orders placed at Nvidia's 160 price level. From a liquidity standpoint, I judged that the stock price would definitely break through 160, forcing the market makers to absorb those sell orders. On the battlefield of financial markets, prices are never just random walks. They're drawn by liquidity, charging toward large orders and deep liquidity zones, and that's the principle of liquidity. Market prices tend to move toward areas with greater liquidity, just like bullets fly toward dense targets, and battles shift toward well-supplied directions. Why is that? Because market makers want to arbitrage by absorbing orders, and hedgers are eager to close their positions. Algorithmic traders aim to cut costs, major institutions must strategize, and only areas where trades happen and profits are possible are true battlegrounds. In this game, whoever understands liquidity distribution controls price movement. Based on liquidity principles, I predicted the stock would reach 160, which was Tuesday's close. It really did hit 160, and as my account reached 22,000, I marveled at how precise Abao's grasp of Nvidia was, like a sniper's bullet. On Wednesday, Nvidia climbed to 163, and Abao's account rose to 31,000. Nvidia became the first company in history to reach a $4 trillion valuation, truly deserving its title as the world's top company. Nvidia stock surged 65% in just 3 months. Amazing! People always ask me, Abao, why focus only on Nvidia, just one company? What I want to say is, this isn't a choice, it's the answer. In the first half of the year, when retail investors panicked and sold at a loss during pullbacks, only those who reached my level of understanding could remain unshaken amid the wild waves. The ups and downs of my account are just ripples on the candlestick chart, but I see the current beneath the tide. Every breath Nvidia takes is laying the groundwork for a $4 trillion empire. The room is filled with an air of elegance. Let's just say I never met you, foreshadowing. On the morning of Thursday, July 10th, before the market opened, Nvidia had already reached 164. I analyzed the options data and found that the top 3 options were all in the money. I figured that this week, market makers might have to buy a ton of shares to ensure they have enough stock to deliver if exercised, and the 165 call also brought the potential for a gamma squeeze. The situation looked extremely promising, and at that moment, I also foresaw something else. As the stock price rose, Wall Street would collectively raise their guidance for Nvidia, and there would be a flood of articles hyping up Nvidia. Right now, the average target price guidance from Wall Street for Nvidia is almost all at 175, and Nvidia is about to reach that. So what do you think they'll do? That's right, they'll raise the price target to lock in profits. Sure enough, just as I predicted at 9 a.m., Goldman Sachs released an updated guidance, raising the target price to 185. I can't help but marvel. Abao deserves to be called Nvidia's god, like an ancient Greek deity. Jensen Huang's personality is stronger than Elon Musk's. He knows how to weigh pros and cons and when to be patient, unlike Musk, who is reckless and arrogant, ignoring the bigger picture. As an Nvidia shareholder, you're luckier than Tesla shareholders, many. Nvidia stock closed at 164, and based on Nvidia's options positions, Abao found open interest at 165 as the largest, with 13,000 contracts. According to the law of options attraction, this suggests wherever the open interest is highest, that's like a magnet. The price will be drawn toward it. So I believe that on Friday, July 11th, Nvidia's stock price will be around 165. Looking at Thursday and trying to predict Friday, I can only see 2 possible outcomes. The first is that it gets close to 165 and stays around that level. The second possibility is it surpasses 165 and, due to the option squeeze, reaches 167. Whichever scenario happens, the risk-reward is favorable. The first is more likely, but the second is also possible. Honestly, when it comes to NVDA, Duan Yangping still falls a bit short. Back then, he did 120 covered calls at a 1-to-6 ratio. Rather than being conservative, he was just hoping to get by for the night. In the same situation, Abao handled Nvidia precisely and easily, no fuss, just skill. A Duan Yangping ended up making a deal as delicate as threading a needle. I have nothing but respect for my seniors, but I'm just calling it as I see it. When it comes to Nvidia's trades this year, Duan Yangping didn't do as well as Abao. And on Friday, both scenarios that Abao predicted actually happened. The stock price first shot up to 167 in a gamma squeeze, then, following the law of attraction, dropped back to 165. That's because the huge number of open options at 165 acted like a magnet, firmly pulling the price to that level. The final result was a closing price of 164.092, completely wiping out the largest open interest at 165. This also confirms the market makers kill the abandoned options principle About mentioned in the Chinjin video. On Friday, I took profits at 167 and my account reached 40,000. For this trade, I bought at 159 and sold at 167. Bought at the low, sold at the high. About strategized from behind the scenes and secured victory from 1,000 miles away. In just 8 weeks, my live trading challenge grew tenfold from 4,000 to 40,000. At the roundtable, 5,600 group members and Abao witnessed this memorable moment together. In this world, no one understands Nvidia better than I do. In the comments section, some fans asked Abao why I chose to start with $4,000 instead of more. That's because the original intention behind my challenge to grow $4,000 to $1 million was to prove what retail investors can do. It's also possible to grow a small amount of capital into something big and achieve financial freedom. Why should nobility be reserved for the privileged? You and I are ordinary people, but we can also become heroes. We don't rely on our parents or our backgrounds. We can change our fate in the stock market through our own hard work. Finally, let's shout those 3 words once again. Our Bao Roundtable is absolutely crushing it. On April 15, 2025, Nvidia announced that it would remove its China business from its financial reports. The stock price immediately plunged, triggering a drop of about 6.9%. But on the night of July 14th, Monday, Jensen Huang announced in China that Nvidia's H20 chips would once again be allowed to be exported and sold to China.
Today, I am officially announcing that the United States government has formally approved our filing for the necessary licenses, which will allow us to begin the process of shipping H20s. This is an important milestone, and we are excited to move forward with this next step.
Abao has been waiting for Nvidia with high hopes, but now he's furious. You have to know, revenue from Nvidia's exports and sales to China accounts for 20% of its total performance, and previously, Nvidia had completely marked down this portion of revenue from its results. Before the news came out, Nvidia was trading at 164 for about a week. If you agree that this market-traded price was a reasonable valuation before the news, then now they've regained that 20% of revenue from the China market. This would cause the overall valuation to rise by about 1.25 times, so the corresponding price would be 1.25 times 164. In other words, 205 would be the reasonable price after recalculating the revenue from the China segment. On Tuesday, July 15th, Abao analyzed Nvidia's options data for the week and found that the largest open interest position was 130,000 contracts of the July 18th 170 call. Based on this, he judged that there was a high probability Nvidia's stock price would break through 170 this week, and once the price exceeds 170, the gamma squeeze generated by these 130,000 options contracts would push the stock price even higher, and each 170 call option is trading at about $2.50. Based on this, I calculated that the break-even point for both retail investors and market makers on these options is around $172.50. I'll go into the specific details later, but for now, just remember this number. Based on my analysis of Nvidia's stock price movement, I've put together a set of advanced option strategies that are best suited for the current situation. This option strategy looks like a butterfly spread, but with one wing folded in. That's why I call it the tattered butterfly. This strategy has 4 parts. Buy one 718 167.5 call, buy one 718 175 call, and sell 2 718 172.05 calls. The total cost is $215, so for one contract, that's $215. The maximum loss is $215, and the maximum profit is $266.75. So, when does this strategy lose money? When does it make a profit? And what will the returns look like when the stock price fluctuates between 167.5 and 175? Let's take a look at this profit and loss curve together. First, my break-even point is at 169.65, which is calculated by adding the 2.15 cost to the 167.5 strike price. In other words, as long as the closing price on July 18th is above 169.65. That means I'm making a profit. Those who understand this will see my view on Nvidia was bullish. I believed the stock would be above 169.65. When Friday's close was near 1,202.5, I used this break of billion butterfly strategy. So, as the stock rises, our expected rate of return will keep increasing. When the stock price reaches 172.5, it hits the theoretical maximum return of 117%. If the stock price continues to rise, my profit will decrease somewhat, but overall, it will still remain profitable. Once the stock price goes above 175, the return for this strategy will be locked in at 10.13%. So if you understand this strategy, you'll realize that the idea here is that Nvidia's stock price will be close to 172.5 on July 18th. As long as the stock price stays around 172.5 on Friday, this butterfly spread strategy can deliver the maximum profit. Alright, now here comes the most valuable question in the whole discussion. Why did I set the maximum profit point at 172.5 when designing the butterfly spread? What evidence did I base this judgment on? Why do I believe the stock price will converge around 172.5 on Friday? Remember we just talked about the largest open interest being at the 170 call and that the break-even point for both buyers and sellers is at 172.5? This makes 172.5 a key level for stop losses, hedging, exercising, and position turnover for a large number of institutions and retail investors, resulting in massive liquidity. And according to the law of liquidity, wherever there is liquidity, the price will tend to move toward the area with the greatest liquidity. Therefore, I made the judgment that on Friday, Nvidia's stock price is very likely to converge at this highest liquidity price point of 172.5. That's why, when designing this decoded butterfly strategy, I chose to place the maximum profit point at these break-even points for market makers and retail investors. The underlying logic behind the double return at 172.5 lies in using a low-cost approach to bet on a narrow range, combined with the hedging vacuum at the middle strike price. When the stock price settles at the middle leg strike price, which is 172.5, the first leg achieves full profit, and the net cost of the high and middle legs is offset by the gains from the lowest leg, resulting in no loss. In the end, the amplified return value doubles. This is a Bao's own razor's edge waltz. If you don't even know how to drift, don't even dream about it. Driving a Ferrari one-handed through the curves, this isn't a game. It's the art of carving out profits on the edge of a cliff with calculation and courage. So, after setting up the formation, the trap is ready. All we need to do is wait for Nvidia to take the bait and stop right at 172.5. Bao strategizes from afar, winning battles from 1,000 miles away. By Tuesday, the victory for Friday was already in hand. So why did Bao start with simple calls before, but is now moving on to advanced option strategies? That's because Bao started with 4,000. With 4,000, you can't day trade and you can't get level 4 options trading privileges. So I chose to start with the most basic strategies. Now that the account can be upgraded to level 4 options trading privileges, of course Bao has started using advanced option strategies. In previous videos, you only saw Bao using simple strategies like calls, but little did you know, that was like a swordsman not using a sword. But now, I have a weapon as powerful as the legendary butterfly sword that can open the gates of heaven. Watch closely. Buffett once said, "Be friends with time." Now, with Bao's butterfly decoding strategy and theta as proof, every day that passes means making money while lying down. Bao has directly designed an innovative strategy to make time my ally. On Wednesday, Jensen Huang gave a speech at the expo, openly praising the Chinese AI market and expressing Nvidia's intention for long-term cooperation with China. Nvidia's stock price soared with this exciting news, climbing all the way to 171, and Bao's account also reached 43,000. Bao's decoded butterfly strategy had a buy-in cost of 2.15, and now it's already risen to 2.52. If the closing price on Friday is 172.5, then my strategy could go up to $5. Bao can profit from both delta and theta, benefiting from both the passage of time and the rise in stock price. They're all my friends. Normally, investors who buy robots are afraid of time decay, but now time is on my side. All I need to do is wait for time to fast forward to Friday afternoon's close, and I can fully capture the time value. On Thursday, TSMC released its earnings report and revenue exceeded expectations. The semiconductor sector surged, and Nvidia moved toward the 172.5 mark as expected. At this point, I knew everything was ready, just waiting for the final push. Put simply, if you know all the answers on a test, you can control your score precisely. You can get exactly the score you want. It's like I'm taking a test on the future movement of stock prices. I accurately predicted all the right answers so I could precisely control the score at 172.5. Now, doesn't it seem a bit scary how strong I am? Like, I can cover the sky with one hand and make decisions for all eternity. But what I can tell you is, I've always been this strong. Many people in the comments think I just got lucky before, that I just picked the right direction. But with this move, how will you explain it? The butterfly effect comes from countless simulations and calculations. The market will give the answer, but it's already written into the strategy. On Thursday, Nvidia closed at 173. My billion-dollar butterfly strategy made a 57% profit, and the account reached 51,000. You need to understand the time decay of options. Time decay doesn't happen evenly. It's at its highest when the option is at the money, and the closer it gets to expiration, the faster it accelerates. This loss from time decay is even greater when the stock price is near the maximum profit point of 172.5. Time decay, or theta, accelerates. Once you understand this, you'll see that both time and price movement are on my side. I just need to stay put and time value will wear away. All I need to do is wait until Friday to reel in the net. Looking at Friday from Thursday's perspective, I analyzed that the probability of Nvidia closing between 172 and 173 is 72.3% minus 55.7%, which is 16.6%. This means I have a 16.6% chance of achieving the maximum profit from the over 100 million butterfly within this range. Nvidia closed at 172.41 on Friday, just 0.09 away from the 172.5 target set by a bow, and after-hours trading settled right at 172.5. After this, I believe a legend will spread in the room. In the year 2025 AD, Hua Bao was crowned at the 172.5 mark of Nvidia, and the 0.09 margin of error was the market's most fitting tribute to him. From this chart, you can more intuitively see that Abao's final profit point landed solidly at the position of maximum profit, and Abao's 100 million butterfly strategy itself achieved a return rate of 105%. I bought the 100 million butterfly combo at a cost of 2.17 and finally closed the positions at 4.45 and 4.52 respectively. So looking back, why did Abao choose the 100 million butterfly instead of just buying a call directly? Let's compare the returns of buying a call versus Abao's 100 million butterfly strategy over this past week. This is a screenshot taken as of 3:45 p.m. As you can see, if you only bought the Nvidia 167.5 call, your final return would be 23%, while Abao's 100 million butterfly ended up with a 95% return. A tiny difference can lead to a huge gap. Do you get it now? Abao managed to double the returns by navigating the subtle fluctuations within a narrow framework. And the best trades aren't about personal glory, they're about finding affirmation together with 7,000 like-minded partners. Now it's week 9, and my real money challenge to turn 4,000 into $1 million has reached 6%. But from another angle, going from 4,000 to 60,000, Abao's principal grew 15 times. From 60,000 to 1 million, I still need to multiply it by 16. So in a sense, Abao has already completed half of the entire 10-round challenge. A lot of friends are curious about my real money challenge. If I actually finish it, if I really make $1 million, will there be a second season? Let me officially answer everyone here. Even if you walk 1,000 miles with someone, there will always be a goodbye. If I reach the 1 million goal, the Real Money series will end perfectly. There will be no sequel or extras, only this moment to cherish. Abao's philosophy remains, success doesn't have to be mine, and once the task is done, I move on. All I hope is that someday, when everyone is chatting after a meal or sharing stories online, you can smile knowingly and say, I witnessed Abao's real money trading that year. Because throughout this journey, what I've cherished most, more than any number, has never been the number itself. Instead, it's the unique memories we've created together that I treasure most. Finally, I'll leave you, watching from the other side of the screen, with a question to ponder. Whose money did I actually earn this time by cracking the butterfly profit? If you're clever, leave your answer in the comments. See you next week. The stock market is like a walled city. Those outside want in, those inside want out. As I journey from 4,000 to 1 million, taking the final step before the curtain falls, when the music ends and everyone leaves, I am still Abao. This is the 10th week of the US stock market's 10-fold challenge. The times are blazing hot, and right now we are just at the perfect age. After Abao took profits and closed out the point butterfly strategy on Friday, July 18th, the account has remained in cash. Staying on the sidelines is an art, just like I said before. Those who know how to charge forward are warriors. But those who know when to stay out of the market are the true strategists. In my investment philosophy, I only act when the market direction is clear. When I can't see a definite trend, I stay on the sidelines and wait for the right moment. Do you remember why in the last live trading session I chose the billion butterfly strategy? It's because after Nvidia's continuous rise, my outlook shifted from bullish to expecting a sideways market. That's why I chose the billion butterfly strategy to short volatility, aiming to maximize profits if the stock price stayed flat at 172.5. There's a universal rule in stock price movements. After a rise, the price always goes sideways, and after going sideways, it eventually declines. This isn't hard to understand. Prices go up because there are far more buyers than sellers. But as the number of buyers starts to decrease, buying and selling reach a balance, and the price enters a sideways phase. From the moment the market enters a sideways phase, the strength of the buyers has already started to weaken. Sideways movement is like a temporary turning point within a larger trend. Just like a traffic light changes from green to yellow to red, the stock market goes from rising to moving sideways and then to falling. So after taking profits during the sideways movement last Friday, I chose to stay out of the market and wait, avoiding the upcoming decline and waiting for a better entry point. And my patience paid off. On Monday, Nvidia moved sideways at 170, and on Tuesday, Nvidia plunged as expected. The stock price dropped to 167. If I had just sat there and forced myself in, it would have collapsed on its own. I have my own trading system. Thankfully, I didn't go in. No matter how much others beg, it's just noise. The logic behind making money in the stock market is actually very simple. Go long before the stock rises. Short before the stock goes sideways and stay out of the market when volatility is about to drop. Looking back at my 10 weeks of trading records, when the stock price rises, I buy calls. When it moves sideways, I do broken wing butterflies. When it falls, I stay out of the market. With this strategy, making $1 million is just a snap of the fingers. And you must be really curious, what exactly am I waiting for while staying out of the market, waiting for the right moment? Actually, I had my trading plan figured out last week. Stay out of the market until Wednesday, then look for the right opportunity to get in. July 23rd, Wednesday, is the AI Day designated by Trump. As the world's largest GPU designer, NVIDIA's AI Day is basically a coronation tailor-made for them.
Stand up. What kind of job is this? What a job you've done. Yeah. America's unique advantage that no other country has. Possibly have as president, Trump.
When Trump and Jensen Huang recognized each other, the gears of the era quietly meshed together. The wind I was waiting for while staying out of the market, he has arrived. The move that split open the gates of heaven was last week's First Master's $100 million butterfly, while the Immortals cabinet today is the vertical value of the second generation, the best live trading lesson in the world. Everyone, watch closely. Abao's strategy has two parts. Buy one Nvidia July 25th 165 put and sell one Nvidia July 25th 167.5 put. For example, with a vertical spread, the strategy locks in $250 margin and gets $78 premium. Max loss is $250 minus 78, or 172. Max profit is 78, and max return rate is 78 divided by 250. That is 31.2%. The break-even point is 167.5 minus 0.78, which equals 166.72. If the stock price closes above 166.72 on Friday, you make a profit. If it closes at 167.5 or higher, you get the maximum profit. Once you understand Abao's vertical spread combination, you can guess Abao's viewpoint. I believe that thanks to the positive momentum from NVIDIA's AI Day, the stock price will rise above 167.5 on Friday, July 25th. Buffett says to be friends with time, and right now, both time and the rising stock price are on my side. Both delta and theta are working in my favor. In other words, both the rising stock price and the passage of time will help me earn more. So whether the stock moves sideways or goes up, I can maximize my profits. So what are the advantages of the vertical spread strategy? First, the risk-to-reward ratio is clear. You know the worst-case scenario, which is a loss of $172. The best-case scenario is a gain of $78. Secondly, the risk is controllable. Unlike selling naked puts, which can lead to unlimited losses, this spread combination caps your risk. Another advantage is that in a slightly bullish or sideways market, you don't need the stock price to soar. As long as it doesn't drop below a key support level, you can still profit. Finally, the return on investment is high. A 31.2% gain in just 3 days is extremely efficient. So what kind of investors is this strategy suitable for? First, short-term traders like me who want to capture a specific event, for example, the short-term boost brought by this AI day. Second, it's for situations where you have a clear short-term outlook on the underlying asset and believe it should go up, but not by much. It's suitable for investors with strong risk control who want protection from unlimited losses. It's also good for those with smaller accounts, since only a 250 margin is needed, making it cost-effective. On Wednesday, July 23rd, the market was filled with positive news. First, the Japan-US tariff agreement surprised the market by being only 15%, not the expected 25%. On AI Day, Trump promoted AI and praised NVIDIA. After the market closed, Google's financial report showed higher capital expenditures, which is significant for a tech giant like Google. This is especially good for semiconductor stocks, with Broadcom and NVIDIA seeing the biggest gains. NVIDIA's price is now $172.9, and my account has reached $70,000. Looking at the win rate of the vertical spread strategy, we see the implied volatility in NVIDIA's options. The price fluctuation range priced in by the options is between 169.69 and 176.08, so our maximum profit point at 167.5 can be considered a sure win. According to probability models, the chance that the stock price closes above 167.5 on Friday is 83.72%. At this point, a bow is strategizing from afar, winning the battle before it even begins. The move we made on Wednesday already determined the outcome for Friday. To you, this might seem like a stroke of genius, but to me, honestly, it's just routine, something I can do with ease. On Thursday, just as a bow predicted, after so many clear bullish entry signals on Wednesday, big money started pouring into NVIDIA, and NVIDIA's stock price kept climbing, reaching 1G3. Meanwhile, a bow's account also rose to 81,000. A 95% return. Let me explain here. Since this is a strategy involving selling options, when you sell, the return rate will show as 0% at that moment because you've just received the premium and the market price hasn't changed. As the expiration date approaches, if you capture the maximum profit, the return rate will show as 100%, which means you've earned the entire premium. This return rate is calculated based on the premium and does not include the margin, so it's different from your actual overall return. It reflects only the performance of the vertical spread strategy itself. Sharp-eyed viewers may notice that as of Thursday, a bow's overall account return rate is 81,596 divided by 59,385, which is 37%. This is already higher than the previously mentioned theoretical maximum return rate of 31.2%. So why has Oppo's return rate already surpassed the theoretical maximum even though the time isn't up yet? There's actually a little trick here. When you sell a set of vertical spreads, you receive a premium, and that premium can be used as margin to open even more positions. After a bow opened the first position with vertical spreads, he earned a premium and then used that as margin to open even more sets of vertical spreads. That's why a bow's return rate is even higher. Let me give you a simple analogy. It's like you have $100 to buy candied hawthorns. Each candied hawthorn skewer costs $10, and after buying one, you get $2 back as cash back. So you can first buy 10 skewers, then get $20 in cash back and use that 20 to buy 2 more skewers. In the end, you have a total of 12 skewers. On Thursday night, Trump went to the Federal Reserve to talk with Powell, kind of urging the Fed to cut interest rates. A bow predicts the Federal Reserve will cut interest rates in September, which means a positive boost for the macroeconomy is coming. The September rate cut will also further stimulate the stock market. Since the macro environment is stable and a bow's vertical spread had already captured 95% of its maximum profit by Thursday, if I had just waited on Friday and collected the last 5%, my account balance would have reached $82,000. But a bow's investment philosophy is to pursue maximum profit and always stay hungry, so I adjusted my strategy and made 12 new trades that day. I planned it out and launched the final charge on Friday. Early Friday morning, I closed out my original 165 to 167.5 put vertical spread and opened a new 170 to 172.5 put vertical spread. The logic behind this trade was that the profit from the previous vertical spread had already been realized, while there was still profit potential in the new vertical spread. So I closed the former position and bought the latter in order to pursue the maximum possible return. The reason I chose 172.5 as the profit maximizing strike for the new vertical spread was because NVIDIA opened flat on Friday between 174 and 172.5, which provided plenty of opportunities. There was a safe margin of buffer. My expectation was that Friday would be a sideways trading day, and this move, acting later but arriving first, leaving no trace, was the final killer move in this set of vertical spreads, like a dazzling sword technique. We should use our remaining strength to pursue the fleeing enemy, not just seek fame. The return on the first set of vertical spreads I learned from the overlord was 37%, and the second set of vertical spreads gave me a return of 5%, totaling 43%. Some friends and family have complained that my return rate is too low, but my friends... You have to understand, compound interest is a process of accumulating bit by bit over time. A single spark can start a prairie fire. The extra 5% profit I made today will have a snowball effect as I work toward multiplying my capital 12-fold to reach 1 million. Just as I expected, Nvidia traded sideways at 173.5, and Abow's vertical spread between 170 and 172.5 achieved the maximum profit strategy with a 100% return. Now that you've learned about vertical spreads from Abow this week, it's your turn. Here comes the Midas touch. You don't need the stock price to rise or fall dramatically to make money. This week, Nvidia's closing price was almost unchanged compared to last week, but Abow still made a 43% profit through the vertical spread. This is yet another waltz on the knife's edge, profiting from the slightest fluctuations in the stock price. When in today's profits, the vertical spread strategy that Abow uses is a common arbitrage method among market makers. Now, I can be a market maker all by myself. This is something unique to me, Wall Street Abow. Listen up. Abow makes money in the stock market like drawing water from a river, endless and inexhaustible. Some people say the stock market's just a casino, but Abow says, where else in the world can you find such a fair casino? Abow has already planned it out. The strategy for next week will be released right on time at 10 a.m. New York time this coming Monday at the Roundtable. Up to now, our 10-week live trading has reached 832 trades with a total return of 22%. On my journey to $1 million, besides maximizing profits, I'm doing my best to avoid drawdowns. Both matter. The challenge from 4,000 to 1 million is done, and at 8.5%, I'm still 11.7 times from the $1 million goal. There's a legend, a group of retail traders brave and clever, as fierce as wolves and as resourceful as firewood. They never fail in attack and are unbeatable in battle. Even market makers become their rivals, and trading floors flee in fear, leaving all behind. This group is called the UP-US Stock Research Society, or the Wall Street Hunters. Two big news stories broke on Sunday. First, the US-China tariffs have been postponed for another 90 days. Second, the US and Europe have reached a 15% trade agreement. This means that, for now, the stock market will temporarily set aside macro-level uncertainties. Next week is also when the Federal Reserve will announce its July FOMC decision. Even though Trump has ordered Powell to cut interest rates, but I don't think Powell will listen. I expect rates to stay the same in July, with a 25 basis point cut in September. Evidence comes from the swap market, which now gives a 2.6% chance of a July cut and a 63.9% chance in September. The ongoing rate cut cycle is basically the signal for a bull market. And I'm already poised and ready to go. On September 1st, we will begin recording the final session of the Live Trading Challenge. The 11th and final week of the US Stock Live Trading Challenge. On July 27th, the results of the US-Europe tariff negotiations over the weekend acted like a shot of adrenaline jolting the market. On Monday, July 28th, the market went wild. At the same time, the market's greed index hit a new high for the year, on the verge of entering extreme territory. With the market surging so quickly and me holding a short position, I think most people would feel FOMO and anxiety. After all, going long is like joining the herd in a frenzy. But that's just not who I am. As Buffett said, when others are greedy, I get fearful. Today, I want to add that while I feel fear, I can also go against the crowd. So this time, I'm going to start shorting the market. After analyzing NVIDIA's options data, I found that the max pain point is at 165, which is much lower than Monday's stock price of 176. This data shows that NVIDIA's options positions, just like the market, are in a state of extreme greed. A potential pullback might be coming soon, and max pain is often used in options analysis as the price point where market makers inflict the most pain on options holders. So let me explain what max pain is. Max pain is a concept in the options market that describes the price point on options expiration day where the majority of options holders experience the greatest losses. It is a theoretical price calculated based on the open interest of options contracts in the market. It usually reflects the tug-of-war between options buyers and sellers in the market. Traders may use the max pain price as a potential magnet point for the stock price on options expiration day. In theory, the stock price might be pulled toward max pain because options sellers are motivated to do so through trading activity. This can influence the direction of the price. For example, if a stock's max pain is 100, the market might push the price toward 100 near the expiration date to make as many options as possible expire worthless. If we look at the options for the week of August 1st, the top open interest position is 94,000 contracts at the 177.5 call. Next are 89,000 contracts at the 185 call and 71,000 at the 18 call. Based on the principle of open interest attraction, a bow determines that the largest number of open interest is at 177.5, which will act like a magnet and draw the price toward it. This will pull the price closer to 177.5. At the same time, based on the market maker's principle of crushing options, a bow predicts that the top three options this week, 177.5, 185 call, and 180 put, are very likely to become worthless, meaning the stock price will probably stay below 177.5. By this point, a bow had formed a preliminary prediction for NVIDIA's market trend this week. I believe that NVIDIA's closing price on Friday will be below or close to 177.5. At the same time, through probability analysis, I found that there is a 68% chance that NVIDIA's stock price will not exceed 180 this week. And in the coming week, potential negative events include the July 30th FOMC meeting decision, the month-end fund rebalancing on July 31st, and the US tariffs on August 1st. First of all, in the last live action video, I predicted that the July Federal Open Market Committee meeting would not cut interest rates, so I consider this a bearish factor. Secondly, on July 31st, there's a very important market event, the month-end rebalancing, which in English is called month-end rebalancing. This means large institutional investors such as pension funds, sovereign wealth funds, and insurance companies rebalance their positions to target allocations at the end of each month or quarter based on asset allocation ratios. For example, if a pension fund's target is 60% stocks and 40% bonds, as a result, if stocks surged in July, the ratio might now become 65% stocks and only 35% bonds, which has deviated from the target. So in order to return to the target allocation, the institution will sell some stocks and buy bonds. This process is called month-end rebalancing. Furthermore, because both the Nasdaq and S&P have risen significantly over the past month, while the bond market hasn't performed as well as the stock market, institution stock allocations have passively increased. As a result, they have to sell stocks at the end of the month and buy bonds or hold cash to bring the ratios back in line, which creates selling pressure on stocks on July 30th. This is a structural negative for stocks. And finally, on August 1st, Trump's tariffs take effect. No need to say much about that. It's clearly a bearish factor. When I connected all these clues together, a complete trading plan formed in my mind. It took shape. I believed that both NVIDIA and the broader market would decline this week, and I wanted to focus on NVIDIA. Next week, NVIDIA's price this week would not exceed 180. Unlike the usual approach of shorting stocks or directly buying puts to bet on a drop, I chose a completely different method. The second is the vertical spread, specifically the bear call spread. The bear call spread strategy consists of two parts, buying one 182.5 call and selling one 180 call. The overall strategy is mildly bearish, but it doesn't involve directly shorting. Instead, it creates a vacuum zone between the current stock price at 176 and 180. Whether the stock price drops, moves sideways, or rises slightly, as long as it does not exceed 180, I can achieve the maximum return. Now that the plan is set, all that's left is to execute it. At 9:50 in the morning, I opened the position as planned. I sold one bear call spread from 180 to 182.5, selling one August 1st 180 call and buying one August 1st 182.5 call. This time, both time and a price drop are on my side. If the stock price is below 180 at Friday's close, I'll get the maximum profit. If it's above 182.5, I'll take the maximum loss. But the most dramatic part is, just 10 minutes after I placed the order, Nvidia started to drop. On the candlestick chart, the upward curve became a falling arc, like a spark drop in a twilight. As I sat in front of the screen, I couldn't tell if I was a prophet or just a name already written into the language. The Tuesday closing price for the first contract was 5.61. Based on this, the weekly price range was 172.12 to 180.62, just below a bow's break-even. By Friday's close, there was a 74% chance the stock would be below 180. As long as it stays below 180, a bow can achieve maximum profit. On Wednesday, Nvidia rose along with the broader market. Through order flow analysis, I saw that there was a sell order of 280,000 shares at 180, and with depth visualization, you could see that the sell orders far outweighed the buy orders. I once again confirmed that there was significant selling pressure at 180. I became even more determined to stick to my plan of shorting Nvidia. In the afternoon, the Federal Reserve announced interest rates would stay the same in July, with no cut, and the stock price started to fall. At that point, I was almost certain the story would unfold as it had before, going smoothly as I predicted. But maybe that's the charm of the market. There is never a 100% chance of winning. The market can deliver a blow just when you feel most confident. The only certainty in the market is uncertainty. Man proposes, God disposes. After Wednesday's close, an unexpected black swan event happened. Meta and Microsoft's earnings reports both far exceeded expectations, lighting the fuse of market sentiment. After hours, the stock prices of Meta and Microsoft soared, instantly pushing the entire market into a frenzy of irrational bullishness. Waves of retail investors, fearing missing out on the rally, saw their FOMO explode. After hours, impulsive buying surged, with Nvidia jumping to 180.9, and in late trading, it hit 185. The situation quickly worsened. If Nvidia stays at 185 by Friday's close, ABA's 180-182.5 bear vertical spread will be worthless. As a seasoned trader, I analyze the market using my trading logic. There are 188,000 open contracts on the 180 call, and tonight's after-hours surge is due to a gamma squeeze and irrational frenzy. But gamma squeezes and this kind of sentiment are unsustainable. It can't last. By the market maker's principle of a crash in options and attraction, the stock price will fall below 180 on Friday, wiping out everything above. Based on earlier order flow data, I confirm there are many sell orders above 180, creating strong selling pressure. This trend surprised me. The market sentiment left me shocked. But in investing and trading, never let emotions cloud judgment. Rationally, I know my analysis is well-founded and that a downturn is still possible. But emotionally, I resonate with everyone's panic and anxiety. I can't be completely sure whether the market will actually fall as I expect, and this uncertainty is the very nature of the market. It's also a challenge we face within ourselves. From the moment I place an order, I'm prepared to take responsibility for my own decisions. I've always believed that when it comes to investing, you have to stick to your own principles. If the market goes against you, but you're sure you're right, then you should stick to your guns and remain consistent. At that moment, I was convinced the market was wrong and that it would soon admit its mistake. Since things had come to this, I decided to stick to my trading system, trust my own judgment, and calmly await the verdict of fate. But fate, fate, always loves to toy with people. Just a few short hours after the black swan appeared, the white swan quietly arrived as well. Early Wednesday, as Nvidia surged to 185, a notice from Tsinghua University cooled the market. Tsinghua said Nvidia's H20 chips sent to China had backdoors and vulnerabilities and asked to meet Nvidia. When the news broke, Nvidia's stock price dropped, falling from 185 to 182. This is not the wind I was waiting for. But it still came. The romance of the market lies in the fact that it allows you to briefly play the role of a prophet, just so you can experience it more deeply. In the face of eternal uncertainty, we are, after all, just holding candles. The gamblers in the jade market rise and fall like the tides. There are never eternal winners, nor will there ever be perpetual losers. This isn't just something I tell myself, it's also for those clueless rats who go out of their way to mock us during our brief moments of misfortune. As for what happened next, everyone knows the story. Nvidia opened at 183, just as Abao expected. Many took profits, causing market makers to hedge and sell their positions too. The stock dropped for a while, falling below 180. Then, near the close, the stock took another dive because of the month-end rebalancing I mentioned earlier. I've said this before, but I want to say it again. I just sat quietly and the mountain collapsed on its own. Nvidia closed at 173.072, eliminating top options. According to Gill and Abao, a solid plan and strict execution lay the foundation for success. Every market move this week went as I expected. Wednesday, the Fed kept rates unchanged. Thursday, month-end rebalancing caused a big outflow and a late sell-off. Friday, Trump announced reciprocal tariffs and panic quickly spread. And finally, as stock prices fell, following the market maker's principle of crushing options, they pushed the price down to $17.70. If I hadn't stuck to my investment principles and managed to stay calm in the face of chaos, I might have quietly given up just before the dawn arrived. Thinking back to what I said in the first season of the live trading series, it's because I was able to pull the trigger when everyone else thought I should give up. Looking back now, there were no easy wins. The last lesson that teacher Zhao and Abao taught everyone was the Song of the Western Chu. Bringing it to the sidelines, time is the fairest thing in the world. It rewards those who wait patiently and punishes those who are impatient for quick results. Abo's bear market vertical spread strategy achieved a massive 100% profit on Friday. This drew the attention of the entire national economy. With this, our first season of live trading officially comes to an end. Over a total of 11 weeks, the cumulative return reached 2,625%. Including the principal, that's a total increase at 27.25 times. The stock market is like the ebb and flow of the tides, rising and falling, reflecting human nature. When the tide rises, the place is bustling with noise and excitement. Everyone is riding the waves, standing at the forefront of the market, becoming the trailblazers of a new era. But only when the tide goes out can you see who was swimming naked and who is destined to become a legend. Welcome to the US stock market. In the Perkins $1 million challenge, as of now, my account has grown from the initial $4,000 to the current $136,000. My weekly return is 27% and my cumulative return is 3,296%. I know a lot of you might be wondering, didn't I already announce the end of the live trading after 11 weeks? But as long as there's life, trading never stops. If all the heroes of the world are counted, Abao has never stopped moving forward. A new journey has already begun. Are you ready? That's right. After 11 weeks of live trading, I cleared out all my positions and went to Lake Tahoe for a long vacation. But as I found myself in that seemingly isolated world of blue and white, fate's gears quietly began to turn again. Nvidia, which had been trading around 180 for a month, suddenly dropped without warning, falling as low as 175 during the session. How could a professional trader like me, Abao, miss such a once-in-a-lifetime opportunity? After that, I used the bullish vertical spread strategy from the Two Sleeves of Green Snakes playbook and went all in on the 170 over 172.5 vertical spread at a cost of 0.54, aiming for a 27.5% return. This spread involves selling the 172.5 put and buying the 170 put. As long as Nvidia stock closes above 172.5 on Friday, I'll earn the maximum profit with a 27.5% return. I've been on the sidelines with no position since late July, waiting until now. When I act, I go all in and focus my position. That's my trading system. Nvidia's sharp drop didn't stop immediately on Wednesday. The decline on Tuesday triggered even heavier selling, and Nvidia's intraday price once fell to 168. I judged that today's drop was caused by investors seeking safety ahead of the Fed meeting minutes and Powell's Jackson Hole speech on Friday. Let me explain what risk off or flight to safety means. Simply put, it means money gets scared and moves to safer places. In the stock market, risk-off usually shows up as either selling off stocks or shifting funds into bonds, gold, or US dollars, or just holding cash and waiting on the sidelines. So when you see the stock market falling, bond yields dropping, and gold and the US dollar strengthening, these are often signs of risk-off behavior. But why does money seek safety? It's because of things like the Federal Reserve's meeting minutes and Powell's speech at Jackson Hole on Friday. Both of these are key moments when the Fed might send out important signals. In the Fed meeting minutes, the market wants to see the details of the discussions about raising or lowering interest rates at the last meeting and whether there might be any unexpected content. As for the Jackson Hole speech, it's the classic stage where Fed Chair Powell delivers major policy direction speeches. Many bull and bear market turning points have been hinted at right here. Before major information's released, what the market fears most is a surprise, like suddenly hearing hawkish remarks such as continued tightening and higher rates for longer. That's why institutional funds prefer to reduce risk positions early to avoid being caught off guard. So you might be wondering, will the decline caused by risk-averse funds continue or will it recover? If the final outcome turns out to be relatively mild and the market realizes it was just scaring itself, then funds will flow back in, and the stock market often rebounds quickly. But if the outcome is unexpectedly hawkish, then risk aversion can lead to selling, deepening, and extending the decline. If results meet expectations, the market relaxes and risk-averse funds return, easing the drop. In short, declines from risk aversion are usually short-term precautions. After the news is released, only then will it be clear whether the market will rebound or continue to be hit. In this case, some institutions, worried about the uncertainty of the Federal Reserve, sold off in advance for risk aversion. But risk aversion can't last, because such actions are one-off, so this decline can't continue for long. As for the Fed's stance, my own judgment at the time was that they would be dovish and cut rates in September. So I believed that once the risk aversion event ended, funds would definitely flow back in. And as it turned out, I was right. At 2 p.m. on Wednesday, as soon as the 5-minute report was released, I went to check the original text and saw that there was 1 abstention, 2 votes against, and the rest all supported a rate cut at the next meeting. The market immediately surged in response. Nvidia finally closed at 176, so my 170 over 172.5 vertical spread can steadily achieve maximum profit. Now, all that's left is to wait for time to pass. I was extremely firm during Nvidia's decline, without the slightest wavering, because I trust my own trading system and judgment principles. As long as something aligns with my principles, I execute it with full conviction, and I'm not swayed by outside forces. You might think that options are too risky and that in this trade I didn't buy at the lowest point, which increased the risk. But I'm not here to praise a perfect trade. What I want to say is that on the road to trading, there is no success without taking risks. Only by facing risk head-on and turning it into a weapon in your own hands without hesitation or second guessing can you have a chance of success. On Thursday, I noticed that Nvidia's max pain was at 177.5. Based on the market maker's principle of killing options, I judged that the price might close near 177.5 on Friday, settling at the max pain point to wipe out the most options. If the price closes at max pain on Friday, only 27,000 of the 175 calls will survive. All the others will be out of the money and end up worthless. This is exactly the market maker's principle of killing options, and it's the correct way to use max pain. But on Thursday night, there was a little twist. The media reported that Nvidia had asked its supply chain to halt production of the H20 chips for export to China. As soon as the news broke, the stock price and after-hours trading plunged to 171. The wave of panic that followed often makes people lose their heads. But faced with the sell-off in the night session, I didn't panic. After checking my analysis repeatedly, I was convinced the market's panic was excessive. I stuck to my discipline, stayed steady, and held to my investment principles. Investing means putting your understanding and logic into practice. If you doubt yourself because of market noise, you lose your foundation. The market returned to rationality on Friday, correcting the previous irrational sell-off. This wasn't a personal victory, but a sign of market principles. In the stock market, prices aren't just random walks, they follow patterns, as my analysis predicted. Nvidia closed at 179.99 on Friday, only 0.49 from 177.5. A buyer always deduces future changes from the tiniest clues in market information, and that's how he ultimately figures out the price. In the end, since Friday's closing price was higher than 172.5, Abow's vertical spread strategy naturally achieved its maximum profit. Abow's account reached 130,000 with a 6-week return of 27%. Once again, Abow's getting closer and closer to his goal of the 1 million challenge. I will use my real trading results to prove to everyone that even with a small amount of capital, you can still grow big and strong. Abow wants to show you, through his own live trading, a possibility in life, a way to change your fate in the stock market, not by relying on a regular job or your background, but through knowledge and skill. A possibility like that? Welcome to the US Stock Real Trading $4,000 to $1 million challenge. By week 13, my account grew from $136,000 in week 12 to $161,000 now. This week's return is 18.4% and the total return is 3,985%. Let's focus on week 13. Of course, the highlight has to be Nvidia's highly anticipated second quarter earnings report. That's right, it's back again. Do you remember what I said in the last Nvidia earnings real trading video? I said it right here. If you don't understand Nvidia's earnings, how could anyone fall into the same pit twice? This time I stuck to my word. If I don't understand it, I won't gamble. From Monday to Wednesday, I stayed completely out of the market. No matter how wildly it went up or down, it had nothing to do with me. Just like that, I stayed on the sidelines through Nvidia's earnings, and sure enough, Nvidia's earnings were just as unpredictable as ever. Just look at people. When the earnings report was released Wednesday, Nvidia's stock price was dramatic. It plunged after hours from 180 to 175, then jumped to 183 at the open, and finally settled around 180. This kind of volatility really was a performance after the report. How many people got burned by this? Well, at least I didn't fall for it this time. Like I always say, no matter how turbulent things get, I stay calm. By Thursday, after the Wednesday earnings report, all the volatility had passed. Based on Nvidia's options open interest and the idea that market makers crush both sides, I figured this week would be a double whammy for bulls and bears. You can see that with the stock price at 180, it just so happens to wipe out both the 180 calls and puts as well as all the other options. So the strategy I ultimately chose was the butterfly spread. On Thursday, I opened a butterfly position, which involved buying one 177.5 call and selling two 180 calls. I also bought one 180.5 call, and my cost for this was 0.68. This way, if Nvidia closes at 180 on Friday, I'll get the maximum profit. On Thursday, Nvidia closed solidly at 180, just as expected, everything going smoothly as usual. But the only certainty in the stock market is eternal uncertainty. Early Friday morning, the black swan struck again. Marvell's financials crashed, its stock price plummeted by 18%, and the entire semiconductor sector went down with it. AMD, AVGO, SOXL, and VDA, none were spared. And when an avalanche hits, not a single snowflake is innocent. If you were Abow, seeing the stock price in free fall and the butterfly strategy at 180, what would you do? If the price drops a little, you hold on. If it drops more, you double down. But realize if the closing price stays below 80, the 180 butterfly will be a total loss. After about 30 seconds gathering information, I decided to cut my losses. Within minutes after the market opened, I quickly closed the 180 butterfly. My account was at 30,000, down from 100,000. To go far on this investment journey, you must first learn to survive. Know when to take profits and when to cut losses. Taking profits means when you've made enough, you stop, even if it means leaving. Cutting losses means when your losses reach a certain point, you let go. The idea is to retreat, using your remaining strength to fight another day. Otherwise, you'll sink deeper. There are two big enemies in life, greed and not accepting loss. These are human weaknesses. Every gambler's downfall comes from these two. At the same time, you also need to learn position management. Abow will personally teach you a position management method for options that's suitable for ordinary people. I call it the mortal cultivation method. Use 97% of your total assets for stocks and 3% for options. This way, if that 3% grows big, it could eventually even surpass the 97%. If the 3% is lost, it won't hurt you either. You can just take another 3% and start over, continuing to improve and refine your trading system. Once you can make that 3% outperform the 97% in stocks, you can start to trust and further hone your trading system. Alright, let's get back to the main storyline. Did you think I was just going to admit defeat and leave like this? Don't be so quick to write my ending. The game has only just begun. I judged that because of the Marvel Black Swan event, the market makers on Thursday moved the 180 option strike down to 175. So after quickly cutting my losses on the 180 butterfly, I immediately reversed my position and opened a new one. The new strategy? Buy one 172.5 call, sell two 175 calls, and buy one 177.5 call. There's only 1 day left, but the maximum profit could reach as high as 255%. This strategy is enough to turn things around and recover losses in just 1 day. Hey, Nvidia closed at 174.18 at 4 p.m. on Friday. Thanks to the last day butterfly, I made a comeback against the odds and overtook the competition, taking my account from 100,000 in the morning after cutting losses to 160,000. Speaking of butterflies, a lot of people in the group have asked me about the strategy, asking me, how does the iron condor compare to the butterfly? Let me tell you, while the iron condor is stable, if you're like me and you're after maximizing returns, the butterfly will always be the ultimate choice compared to the iron condor. That's because the iron condor bets on a range, while the butterfly bets on a specific price point. The core skill in using the butterfly strategy is to first determine the final closing price point. Then find the nearest strike price and open the position accordingly. The narrower the wings of the butterfly, the greater the potential return. So far, my challenge of turning 4,000 into 1 million has reached 160,000, which means I've completed 16%. Follow me so you don't get lost. See you in the next episode. Welcome to the stock trading challenge of $4,000 to $1 million. As of the 14th week, my account, which was at 161,000 in week 13, has now fallen to 80,000. The weekly rate of return is minus 50%. The cumulative rate of return is 1,906%. Indeed, what is earned by luck will eventually be lost by strength. I don't know if you remember, but in week 11, Abao opened a bearish vertical spread, shorting Nvidia from its historical peak of 182. Now, the same chance is here again. On September 3rd, Nvidia was trading sideways at 170. Abao opened a bear vertical spread of 175 over 177.5. I judged that Nvidia would probably fall this week, and by looking at the open interest of the options, I found that the top 6 were all calls above 170. According to the principle of market makers killing options, I judged that it would close around 170 to wipe out those options. On Thursday, Nvidia fluctuated all day in the 169 to 171 range. Everything matched my judgment, which made me certain that Nvidia would close at 170 this Friday. So driven by greed, Abao opened Pandora's box. If I had just waited for the Friday options to expire on my vertical spread, I could have earned $20,000, but I was more greedy. I chose to open a 165-1, 71-75 butterfly spread. The reason I chose a wide spread was because the $5 width allows for a greater tolerance for error, but the overall strategy was to bet that Nvidia's shares would converge at 170 on Friday. It cost 2.25, which means that as long as the share price was within the range of 167.25 to 172.25, I would make a profit. Otherwise, I would lose money. Once again, I was as confident as ever that I could win. But this time, fate was on the opposite side. On Thursday, after the market closed, a sudden change occurred. Nvidia had stayed at 170 for 2 days with buyers and sellers in a consensus balance. But AVGO's earnings report after the close was like pulling out the pillar of that balance, completely reversing the market. At the AVGO earnings conference, they claimed to have received a huge order from a mystery client. The market suspected that OpenAI might have extended an olive branch to AVGO. The market then began to think that while the demand for custom chips is increasing, it might mean the demand for GPUs will be diverted. So AMD and NVDA fell sharply after hours, while AVGO rose 13%. On Friday, Nvidia fell to 165. Abao chose to stop his loss near 165 and ultimately lost half of his principal. Although Nvidia did rise back to 167, and theoretically, if I hadn't stopped the loss, I could have recovered 90%. Once you decide to stop a loss and exit, you must leave the market completely. This is my consistent investment style.
If you want to go far on the road of investing, you must learn how to survive for the long haul. You have to learn to take profits and stop losses. What is taking profit? It means getting out in time when you've earned a certain amount. And what is stopping a loss? It's when you've lost a certain amount, you give up the idea of breaking even, and you retreat in time. Use the remaining strength to fight again in the future. Otherwise, you will just sink deeper and deeper. There are two great enemies in life. One is greed, and the other is an unwillingness to accept a loss. These are human weaknesses. The lives of all gamblers collapse because of these two things. There are no eternal winners in the market, nor are there eternal losers. This drawdown also gave Abao a chance for profound reflection. Reviewing the situation, my judgment of the major trend was that it would fall. So, instead of the 170 butterfly, I should have opened a 170 broken wing butterfly to protect the downside. That way, even if it fell to 165 on Friday, I wouldn't have had a loss. I was bearish, yet I chose a strategy for a small sideways range. This is the fundamental reason this trade failed. And the butterfly strategy itself is one with a high profit to loss ratio but a low win rate. It's very difficult to use, even Abao failed with it this week. If any of you use it, you need to be very careful and control your position size. Investing is like rowing against the current. If you don't move forward, you fall back. I lost money this week, but I won't give up or let this setback defeat me. It's not a big problem. I just need to wait for the next opportunity. Some of you might think that because Abao is always trading options, it's just too risky. But Abao's attitude toward life is to be brave and take a shot. In the stock market, there's really no such thing as a perfect strategy. If you pursue perfection too much, you'll find it's impossible to achieve anything. If you're always trying to play it safe, you'll often find you can't move forward at all. The greatest risk is not being willing to take any risk. In the stock market, only by taking risks do you have the chance to earn excess returns. So why not be a little more courageous and let go of your worries? After all, you only live once. Why not live a life that's a little more spectacular? Welcome to the 15th week of Abao's US Stock Real Trading Challenge. This week's return is 100% with a cumulative return of 3,900%. The recording time for this video is December 11th, New York time. The 15th week of real trading covers the week from September 8th to September 12th. The purpose of this delayed update for the Real Trading series is to prevent everyone from blindly copying trades. Everyone needs to realize that what's truly valuable is learning how to fish, understanding Abao's trading mindset, rather than just focusing on the results. All right, let's dive into the 15th week of real trading. First, let me help you recall which week this is. The biggest event this week was Oracle's fiscal year 2026 quarter one earnings report, the one where the stock soared 30% after hours when the report came out. The story for this week actually starts right here. Fans who watched the 14th week of real trading probably know that my account was cut in half last week, so this week I'm being a bit more cautious and staying on the sidelines. We need to build up our strength in the fog of uncertainty and strike with precision when the time is right, waiting for that one sure opportunity and the only opening where we can make a decisive move. Starting Monday, I stayed out of the market, waiting for the right opportunity. If I didn't see the setup I wanted, I wouldn't open any positions and just kept waiting. Then on Wednesday, September 12th, I finally got the opportunity I'd been waiting for. Oracle's earnings report revealed plans to build 47 data centers and projected AI revenue to grow to $144 billion by 2030. This triggered the biggest surge in US stock market history. After hours, Oracle's stock price soared by 35%. Keep in mind, Oracle isn't some small cap stock. This jump pushed its market value straight up to $992 billion. Thanks to Oracle's earnings report, market sentiment was ignited. Nvidia opened higher on Wednesday, climbing from $170 to $178. Going long is what most people choose. FOMO buying at the top is what retail investors do. But the truth is always in the hands of a few. In my opinion, the market blindly chased Oracle and pushed its stock price up 35% in a single day just because Oracle announced massive AI capital expenditures. That's extremely irrational, and it's just as irrational for Nvidia stock to be dragged up along with it. So I saw a shorting opportunity here. If you look at things from my perspective at the time, on September 10th, when Nvidia's stock price hit $178, it was actually already close to its all-time high of around $180. There's a prerequisite for shorting. You have to do it when the price is high. Only when the stock price reaches its peak is shorting the safest and most profitable. So when the stock price approached 180 and I saw NVIDIA surge as an irrational move by the market, shorting again was the perfect embodiment of my convictions and actions aligning. From a technical perspective, the high point between 178 and 180 was actually a classic weak high.
The candlestick reached a historical high but didn't surpass the previous peak and then quickly formed a bearish engulfing pattern. This kind of price pattern is ideal for shorting. A bearish engulfing is usually seen as a signal that the price has peaked and is about to fall, or as a strong sell signal. The appearance of a bearish engulfing candlestick pattern often means that the upward momentum is run out and major funds are selling off. There's a high probability that a decline will follow. This is a classic warning sign, reminding us to rein in our greed and be mindful of risk. For a bow, this is a strong signal to go short. When Nvidia's stock price was at 178, a bow opened a short position using a bear vertical spread strategy. I opened a total of 405 bear vertical spreads at 180 and 182.5, with a cost of 0.25 each. This reflects my bearish outlook on Nvidia. I believe that by Friday, Nvidia will be below 180. If Nvidia closes below 180 on Friday, I'll earn the maximum profit. My break-even point is 180 plus 0.52, which is 180.52. In other words, 180.52 is my profit and loss threshold. If it's below this number, I make a profit. Otherwise, it's a loss. The data supporting my decision to make this trade comes from Nvidia's open options positions. You can see that the largest open interest is the 110,000 contracts of the 175 call. According to the principle of attraction, wherever the open interest in options is the highest, that price acts like a magnet and will pull the stock price toward it. So based on this week's options open interest data, I've concluded that Nvidia's closing price on Friday will converge around 175 below 180. This aligns perfectly with my 180 over 182.5 bear call vertical spread strategy. On Thursday, September 11th, the CPI data was released and it matched market expectations. At this point, in my view, a 25 basis point rate cut in September has become a certainty. Meanwhile, Nvidia's stock price once again played with investors' nerves, surging to 180 at the opening, only to drop back to 177 within 5 minutes. If it were you and your break-even point was at 180.52 and the stock price was approaching 180, wouldn't you be nervous? Wouldn't you start worrying about what to do if you end up losing? In the stock market, we're always torn between the fear of losing and the desire to win. When we're afraid of losing, all our attention goes to avoiding risk. We tread on thin ice, anxious and uneasy, letting the fear of failure shake our confidence, and ultimately we lose our rational judgment and fall victim to our own timidity. I never let emotions affect my judgment. I only make decisions based on factual data. When I examined this trade of mine, I realized that the reasons I made this trade haven't changed, and I know that the current surge in emotion is nothing more than a fake bubble propped up by FOMO-driven retail investors. As the first 30 minutes after the market opens pass and emotions die down, the stock price will return to its average. The first 10 minutes after the market opens every day is when retail investors are at their most emotional. Initially, people buy at 180, but minutes later it hits 177. Retail investors rush in emotionally at the open, but within 5 minutes they've tapered off. With limited FOMO buyers, once their money's spent, sentiment flips. So when it comes to actual trading, I usually just watch during the first 10 minutes after the market opens and don't make any moves, because prices during this period are all propped up by emotion and don't reflect the real supply and demand. Only after the emotions settle can you see the true intraday trend. Analyzing new options open interest to crush options, the 102.5, 185, and 180 calls will definitely be crushed. Market makers also want to crush the 175 and 177.5 calls. Theoretically, dropping below 175 wipes out all top options. But if the market is too strong and pushing below 175 is too costly, they'll settle for the next best thing and target the 177.5 instead. But no matter which scenario plays out, for about 180 and 182.5 vertical spread strategy, it consistently delivers the maximum profit. That's also why I chose to set the lower leg of the strategy at 180 instead of shorting at 177.5 or 175. By the close on Thursday, Nvidia's stock price was at 177, and ABAO's bearish vertical spread had already nearly reached its maximum profit. Anyone familiar with a BAO knows that I'm never easily satisfied like this. Friday at open, I closed the vertical spread. Then, using market maker option killing levels, I reopened the butterfly that halved my position last week. I've lost before, but I'm not afraid. This time, I'm back in the game to defy the odds and win. I opened the doomsday butterfly spread at 175, 177.5, and 180 with my cost at 1.41. The reason I chose 177.5 is because based on the open interest data I mentioned before, I judged that 177.5 is the next best option that market makers would settle for when killing options. This doomsday butterfly strategy is essentially a bet that Nvidia will close at 177.5 on Friday. In the end, Nvidia closed at 177.82 on Friday, almost exactly at the maximum profit point of my doomsday butterfly at 177.5. With my doomsday butterfly and the bearish vertical spread, these two strategies together achieved a 100% return. From Monday to Thursday, I meticulously worked with vertical spreads, accumulating every bit of certainty within a narrow range. Then on Friday, just like a butterfly breaking out of its cocoon at doomsday, I focused all the dormant power into a single point, decisively capturing the profit within the target range. This is a Bao's way of playing the game, with precise calculations making that seemingly effortless move right at the boundary between certainty and risk. I'm laying my cards on the table. I'm the stock market guy. Look at my real trades. I lost half my account in week 14, but doubled it right back in week 15. Since the Bao started trading, it hasn't been smooth. His portfolio halved many times, but he always doubled it back and then some. Sometimes we overthink and lose our nerve, fearing failure so much we don't move. If you're afraid to lose, you'll never win. Last week I lost on a doomsday butterfly strategy, but this week I used it again and doubled my money. We should swap our obsession with not losing in investing for the courage to go all out to win. After all, the biggest regret in life is never about losing after giving it your all, but about not having the courage to start when you could have won. I don't recommend going all in on options with your whole account. I only did it because my initial risk was just $4,000. Please recognize the risks and follow my immortal cultivation method. The final chapter of the Real Trading Challenge Season 2. You probably all know that I hit a major setback with Meta, and the last episode of the Real Trading Challenge Season 2 was actually my final trade before that happened. Since I had already made the video but never released it, I thought it would be a shame not to share it. So today, I want to share it with you all as a review and learning session. The last episode of the Real Trading Challenge actually dates back to September 22nd to October 3rd, 2025. Over the course of both Season 1 and Season 2, which together spanned 17 weeks, I turned $4,000 in real trading into $280,000. These 17 weeks were like a chapter cut out from my life, the last blaze before a shooting star disappears across the sky. After that, the world fell into night, but the firelight remains forever in this moment. On Monday, September 22nd, 2025, Huang Ruichun and Altman reached a deal. Nvidia will invest $100 billion in OpenAI. Let me break down the logic behind this investment for everyone. As the world's largest company, Nvidia has cash on hand and is looking to invest. The goal is to increase future returns, while OpenAI is in the stage of developing GPT and needs to burn through a lot of cash to buy GPUs. OpenAI is short on both money and chips. They want to buy Nvidia's chips and also need financing. In the end, the two companies hit it off. Nvidia invests $100 billion in OpenAI, and OpenAI ramps up its purchases of Nvidia chips. This is extremely good news for Nvidia, so as soon as the news broke, Nvidia's stock price skyrocketed, immediately reaching a new all-time high, 183. For us regular retail investors, when we see such overwhelmingly positive news and a soaring stock price, the biggest mistake is to FOMO in and chase the rally. If you have the guts to jump in at this point, I salute you as a warrior. If you make money, it's a gift from luck. But that doesn't fit my trading system, so I choose to watch from the sidelines and patiently wait for the hype to die down. I'll only come up with a strategy after the market settles down. By Tuesday, September 23rd, 2025, the FOMO sentiment from Monday had faded, and Nvidia's stock price had dropped from 183 back to 180, becoming more stable. At the same time, I made the call that it was time to reduce my position. First, I analyzed Nvidia's options open interest data for the week. I found that the largest open interest was 94,000 contracts at the 180 strike. According to the principle of attraction, wherever the open interest is highest, that price acts like a magnet and tends to pull the stock price toward it. So I made a prediction. I believe that by Friday, Nvidia's stock price will gravitate toward 180. Many of you watching this have probably already seen Abba's 15-week live trading videos. Let me quiz you. My current view is that NVIDIA's stock price will move toward 180 by Friday. So, what's the most suitable option strategy for me to use? 3, 2, 1. That's right, it's a butterfly. I set up a 175, 180, 185 butterfly spread, buying one 175 call, selling two 180 calls, and buying one 185 call. The cost is 1.5 and the profit range starts at 176.5 up to 183.5. In other words, as long as Nvidia's stock closes within this range on Friday, this butterfly strategy will be profitable. When the stock price is at 180, the profit reaches a maximum of 228%. I fully opened this butterfly position on Tuesday, calmly waiting for the results. On Thursday, September 25th, 2025, the U.S. unemployment data was released. The number of unemployed dropped from 230,000 to 218,000, which was much lower than market expectations. This should have been good news. Unemployment numbers went down. In Abba's view, this just proves that the U.S. economy is strong. However, most investors in the stock market seemed a bit panicked. They ignored logic and stubbornly interpreted the good news as bad news, following the old saying that good news is actually bad news. They brought it up again. Faced with this strong employment data, many people started panic selling. The Nasdaq dropped by 1.3% and Nvidia also fell to $173. Abba summed up a rule in the stock market. The 10 minutes before the market opens are often when retail investors are at their most excited. It's simple. Emotional retail investors rush in at the open. FOMO or panic erupts then. With limited funds, once that money is spent, the market rhythm shifts fast. So when it comes to trading, I usually choose to wait and observe during the first 10 minutes after the market opens instead of rushing in. That's because prices during this period are often driven up by emotions and don't necessarily reflect the real supply and demand. Only after the emotions gradually fade does the true intraday trend of the market start to emerge. Honestly, the market's movement in the first 10 minutes today left me speechless. It was clearly good news, but some insisted on calling it bad, even triggering a panic sell-off. I watched the market panic needlessly. Looks like bad is just bad, no matter what. What's good is good, no matter what, even if the King of Heaven himself showed up. Today's unemployment rate came in lower than expected, and at its core, that's good news for the economy, not bad. When the noise of the majority drowns out the truth, my role is to be the starting point of logic. I wait for the market to admit its mistakes. By Thursday at 9:40, Nvidia dropped to 173.95, and my butterfly strategy lost nearly 52,000 yuan. At that moment, I closed the butterfly position. Remember the butterfly strategy? Buy one 175 call, sell two 180 calls, and buy one 185 call. I closed the 180 and 185 calls, leaving only the 175 call. And I used the extra funds from closing those positions to open more 175 calls. With this move, the original 175, 180, 185 butterfly turned into a single leg 175 call option. The butterfly no longer has its two wings and three legs. Now that I've taken off the wings and removed two of the legs, only the single leg 175 call remains. Yes, this was my way of fighting back against the market's misinterpretation of the employment data. After 10 minutes of panic selling, the market hit bottom and rebounded. Not just any rebound, but a correction after admitting its mistake. By 10:23, the market had realized within just 40 minutes that the employment data was actually positive news, and it recovered all its losses. Nvidia went from red to green, from a drop to a rise. This is a screenshot of my account at 10:43, showing Nvidia's recovery to $777.40. You can see that my position for the day went from a $50,000 loss to a $20,000 gain. Through this, losses became gains as I caught the rebound. My account jumped 70,000, hitting a new high of 193K. I closed the 175 call and opened a 172.5/175 bull call spread. This locked in rally profits and kept momentum. My cost was 0.55, so if Nvidia stays above 175 Friday, I pocket the full premium. This spread's max return is 0.55 over 2.5 minus 0.55, or 28.2%. After recovering, I used this strategy to keep my winning streak going. Thursday at 4 p.m., Nvidia closed at 177.6. Both theta and the price hike helped. By Thursday's close, my account hit 221,000. It was a wild day. My butterfly lost 50,000 in the first 10 minutes. After flipping it to a call, I gained 70,000. I also made 26,000 on a bull call spread, totaling 50,000 in profits that day. Friday, Nvidia closed at 178.19, above my 175 strike. The spread hit max profit, adding 26,000 to my account. Our balance hit 248,000. This week, I used 3 strategies: a 180 butterfly Tuesday, legging into a 1-to-5 ratio spread Thursday, then switching to a 170-25 vertical. This was my best week for technical execution in the 16-week challenge. It shows how I adapt. The profit wasn't luck, but years of skill. This confidence lets me adjust positions on the fly and restructure trades, reversing losses under pressure. True skill is the ability to come back from the brink when others see no way out. As they say, water at its end creates a scene. A person at their limit finds rebirth. Monday, September 29th. Stocks surged as Nvidia hit a record 183 following Jensen Huang's speech, boosting investor confidence. Meanwhile, Feng Gao was shorting it. How do you pick the right entry for a short? First, About looked at this week's open interest in options and found that the highest open interest was at the 190 strike price, with 140,000 contracts. So, without hesitation, I chose 190 as the entry point for my short position. With 140,000 contracts stacked at the 190 strike, it's like building a wall of doom right there. This is what's called a call wall. A call wall means that there's a large amount of open interest in call options at a certain price level for a particular stock. Because market makers need a hedge, this price level often becomes a strong resistance point, making it very difficult for the stock price to break through. So I decided to go with the flow and short again at this wall of doom, aiming to snipe the bulls. Once I set the price and direction, I opened my weekly option strategy. I chose a 190 second 0.5 bearish vertical spread, selling the 190 and buying the 192.5 call for 0.3. If Nvidia stays under 190 by Friday, I profit. About will get a maximum profit of 0.3 per vertical spread. There are 3 reasons why I chose to short at 190. First, Nvidia's current stock price is 183, so it would need to rise at least 3.8% to reach 190. I don't think Nvidia will go up more than 3.8% in the week. Second, 183 is Nvidia's peak. By shorting at 190, I'm betting against a price it's never reached. If it hits 190, strong resistance will protect my short. Third, as I mentioned before, there's a huge cold war at Nvidia's 190 level. This is a bearish factor based on the option structure. The 190 call options make it hard for the stock price to hold above 190, and according to the market maker's principle of crushing options, they'll keep the price below 190 to wipe out most of the bullish call options. This aligns with a bow strategy, and the approach I've chosen means that market makers are essentially on my side. On Tuesday, September 30th, Meta placed a massive $14 billion order, which indirectly confirms the strong demand for AI. Nvidia's stock rose on this news. That's the spillover effect. Both are part of the AI infrastructure, so they move in tandem. In this industry, good news for one often lifts the sector. During the session, Nvidia surged, peaking at 187 and closing at 186.58, its highest close ever. Generally, when a stock hits a new high, it enters uncharted territory without historical price references. A lot of investors will choose to take profits at these levels, so selling pressure often starts to increase. Looking at it from another angle, if you're holding a stock that's already reached a record high, what are you more likely to do? Will you sell to lock in your gains, or will you keep chasing the rally at these high prices? For most rational investors, it's standard to take profits at highs instead of chasing rallies. But some investors get FOMO as prices climb and buy at the peak. Nvidia closed at $186 Tuesday. The question is, so who exactly is still buying at this price? In my opinion, a large portion of them are probably momentum chasers driven by emotion. As of Tuesday's close, my account has an unrealized loss of $46,000 due to Nvidia's rising stock price. Based on my previous analysis, I'm still confident. On Friday, Nvidia will be below $190. Markets were strong today. and Nvidia hit a record 187. At 142, volume spiked. I realized institutions were offloading shares at these highs, meaning profit takers are cashing out. Sellers outweighed buyers. By Wednesday's close, I made $8,000 for the day. The account reached $225,000. Semiconductor stocks surged together. Nvidia jumped to 190.5 at the open, but then started to fall. Two datasets confirmed my 190 bearish spread, starting with order flow. I noticed that there were 27,000 shares of Nvidia sell orders sitting at the 190 level, which far outweighed the number of buy orders. In my analysis, this means there's a large amount of profit taken at 190, with selling pressure overwhelming buying pressure. That's why I concluded the stock price would definitely fall below 190. The second set of data is Nvidia's open interest. I found that there were 140,000 open call contracts at the 190 strike price this week. Based on the market maker's principle of crushing options, I judged that the market makers would push the stock price below 190 on Friday to wipe out all these options. With these two pieces of evidence, I became even more convinced about holding on to the 190 bearish vertical spread. What followed was a slow, steady decline in Nvidia throughout the day, and it finally closed at 188.05. As for my account, by Thursday, I'd lost $8,400. With only 1 day left until expiration, as long as Nvidia either drops, trades sideways, or rises less than 1.5%, my vertical spread strategy will achieve maximum profit. After analyzing the objective data and trading logic, I concluded that Nvidia would close below 190. So all that was left for me to do was stick to my investment principles and views and execute strictly, because the market will ultimately give me a fair outcome. Between 9:30 and 10 o'clock in the morning is when retail investors enter the market. They FOMO in and buy Nvidia at prices above 190, just buying and buying. Once they spend all the money in their pockets, there's nothing left to keep buying. Nvidia instantly drops to 188. Why do most people buy high and sell low, driven by emotion, while ABO does the opposite? Why does ABO defy the FOMO crowd? Because I follow objective data. It never lies. I saw market makers clearing all options above 190, totaling 110,000 contracts. Above 190, sell orders dwarf the buys. It's not that ABO predicts the future, I just analyze every bit of market data. But most people won't look. Once you read market data and price trends, it's clear. Friday, ABO's bearish vertical spread hit max profit, earning $63,000. By week 17, the account reached $280,000, a 69-fold return. ABO started with $4,000 to prove a point. Even with a small amount of capital, you can still make it big in the stock market and turn things around. The reason I started creating content was to show you that it's possible, not relying on your parents, not slaving away at a 9-to-9 job, but instead using your own knowledge and skills to achieve financial independence in the stock market step by step. Build a family, a career, and reach financial freedom. I hope all my followers get this chance. I know this path is tough and full of obstacles. Markets are unpredictable. No one wins or loses forever. After this 17th week of live trading, a lot more happened. I stopped trading Nvidia and instead turned my attention to Meta. First, in mid-November, I perfectly bought the bottom of Meta at $584. But then in December, I misjudged Meta's market trend and lost all my principal. At its peak, my account had reached $560,000, just one step away from my ultimate goal of $1 million. I failed at the last step. Now, I'm back to trading Nvidia. But since I've walked this path before, there's nothing to fear. I've had both successes and failures. I share my live results, my profit curve and transaction records. It's all in the videos. I'm not afraid of anyone calling me a success or a failure. History will judge. Let people say what they will. I won't give up on my trading journey. Since I chose the path of investing and trading, I'll stick to my choice and see it through to the end. And before this video ends, I want to give you all a heads up. Abao will be launching a new live trading series. The specific details of the Manhattan Project will be explained in the next video, so stay tuned. Open for business and counting the cash. I once lost everything in that all-in bet on Meta, but over the past 3 months, I've clawed my account back from the ruins, one trade at a time, to $100,000. I've been waiting for an opportunity, a moment that would let me go for $1 million again. When the clouds of war hung over the US stock market with panic spreading as the market plunged and cries of despair everywhere, I chose to be greedy when others were fearful. I went all in on Nvidia at $167 with my entire $100,000. And today, on Tuesday, March 31st, I decided to cash out at $173, locking in a 55% return. This is the first episode of my third season's Real Money Challenge to reach $1 million. And it's also the 18th week since I started trading with real money. 1 million, here I come again. Monday, I bought $100,000 in Nvidia 180 calls expiring May 1st, 338 contracts total. I felt the market unfairly punished Nvidia and it would bounce back. I chose a 1-month expiration because Congress says the war lasts 60 days max, and 30 have passed, so it must end within a month. I opened the Nvidia call position around 167, but the market quickly accelerated its panic selling due to fears over the Middle East situation, and Nvidia closed down at 163. My emotions were complicated. I believe this sell-off was sentiment-driven. Nvidia's fundamentals were solid, but geopolitical events knocked it to 163, a classic undeserved drop. Still, I felt panicked because I held calls, not stocks. The $4 dip from 167 was a huge hit. That day, my account lost 16%. My 100,000 fell to 84. Calls inherently have leverage, so the drawdown was huge, which gave me a headache. But after I smoked a cigarette and took a leak, I thought it over for a bit and decided not to worry anymore, and to keep holding my long position. When everyone else is panicking, I'm greedy. That's my trading principle. And today, Tuesday, Trump said the US would leave Iran, and that the Iran war was about to end. As a result, all the stocks soared, and Nvidia went up 3% along with them. My options account made a direct profit of $40,000, not only making up for yesterday's loss of $16,000, but also netting a gain of $24,000. You might think I was gambling, but I won the bet. I am a gambler, but I'm also a top-tier gambler. The weak attribute other success to luck, while the strong only look at cause and effect. Right before close, Iran agreed to end the war. Nvidia hit 173 instantly. I sold my options at 173 to lock in profits. I bought 338 calls at 2.94 and sold at 4.6, making a 55% profit. I streamed this live, and at 167, I called out Nvidia 167, the bottom of the universe. Why was I able to be so confident? Because I only trust the data. First, the VIX. When the market was plunging, I kept a close eye on the VIX. When the VIX index soared and broke through the 30 mark, what did that mean? It meant the entire market had fallen into an irrational state of extreme panic. When the VIX breaks 30, for a tech giant like Nvidia with such strong fundamentals, it's definitely not the end of the world. It's a golden opportunity created by panic selling. Retail investors are rushing for the exits, while real institutional money is opening its jaws wide to scoop up shares at this level. Second, let's look at the percentage of profitable positions. I noticed that when Nvidia dropped to 167, the percentage of profitable positions had already fallen below 1%. What does that mean? At this price, nearly all shares are held or sold at a loss. Retailers who'd bail are already shaken out, and selling pressure has dried up. When do institutions like to buy in most? It's when everyone's in despair and there's no profit-taking pressure. This clean vacuum zone has nowhere left to fall. The only move left is a violent rebound. Third, let's look at the put-call ratio. Just looking at the underlying stock isn't enough. We need to see what the smart money's doing. At that time, Nvidia's put option trading volume was skyrocketing, and the put-call ratio reached a historic extreme for that period. Everyone was spending big money to buy puts for hedging. This is what you call the emotional freezing point. In the options market, when everyone is unanimously bearish and the shorts are so crowded that it causes a stampede, that's often the beginning of a reversal. Fourth, there's a surge in trading volume at the bottom. On the June 7th candlestick chart, a panic-driven volume spike at the bottom hit triple the norm. This volume climax signaled a bottom. Desperate retail investors sold off, but with such massive volume, who was buying? It definitely wasn't the retail investors themselves. Only the big institutional players on Wall Street have the kind of capital to swallow up that much at the bottom in one go. Of course, I also have some of my own secret indicators. First, when some regular but confident group members start saying I'm an idiot for buying Nvidia and brag about how smart they are for shorting Nvidia, that's when I know it's time to buy the dip. Second, the group member reproduction voting method. My way of confirming that June 7th was the ultimate bottom of the universe is this contrarian group member reproduction voting method. When Nvidia dropped to 167, 72% of the group members voted that it could still go lower. That's when I knew it was time to buy the dip. Come on, step on it, step on it, step on it, step on it. On Wednesday, April 1st, since the stock price was around 175, I opened 600 sets of 175 over 180 vertical spread strategies. The highlight is Nvidia, which is expected to close at around 180 by next Friday. My strategy's average price is about 2.56, and the theoretical maximum profit is $5. As long as Nvidia is above 180 next week, I can get nearly double the return. On Monday, April 6th, the US set a final deadline for Iran. If they don't open up by Tuesday, the strait will flatten Persia and the market will panic. Nvidia plunged to 174, and in this extremely panicked market, my long hammer vertical spread was in play. You have to understand, my 175/182 strikes basically mean either zero or a feast. If Nvidia's stock price is below 175 on Friday, like the current price of 174, I'll lose everything in my position. If it were you, would you be so scared you panic to your core? Or when everyone else is fearful, I'm greedy. No matter how you answer me, you'll be wrong because you're making decisions based on emotion. I, on the other hand, always make my judgments based on logic. Based on 3 facts, I determined that the negotiations between Iran and the US on Tuesday would definitely succeed, and I also broadcast my analysis to all my loyal fans around the world. First, the date is April 7th. Last year, April 7th was also Tariff Day, which was Trump's day. Second, Trump usually makes his moves on Tuesdays, like a taco on Taco Tuesday. And finally, today is the last extension deadline, so there has to be a taco Trump move. What I said makes a lot of sense. I determined that last year, April 4th, the tariff day, marked the turning point from bear to bull market, and this year's negotiation day is also April 7th. It's going to follow the same script. You might ask, what if I'm wrong? What if things don't go the way I reasoned? My friend, do you believe in fate? What is fate? It's when your personality leads you to the same outcome every single time. That's your fate. What is destiny? Clearly your habits would have you take the shortcut, but you insist on taking the long road. Clearly your temper would have you give up, but you grit your teeth and stick with it anyway. Breaking out of your original ending, that's your destiny. It's a repetitive, dead-end cycle. I believe my fate is to keep making choices, going through cycles of hitting rock bottom and making a comeback over and over until one day I succeed and turn fate into a living monument to trading. On Tuesday, April 7th, the US started quietly shifting its rhetoric, hinting at the possibility of negotiations. That's why I was firmly bullish, not the least bit nervous. I admit, there's a bit of recklessness in me, but I won my bet. I'm a gambler, but just as I expected, Trump announced that the US and Iran had officially agreed to a ceasefire and started negotiations. Everything played out exactly as I had predicted. After this news broke, Nvidia's stock shot straight up to 184. I know the saying, buy the rumor, sell the news. The moment the good news is officially released, that's when it's time to cash out. So, early Wednesday morning, I sold all 600 contracts, totaling $277,000 right at the peak. At the same time, my account hit a new all-time high again. Despite being a great company, when the market drops, Nvidia falls harder, and when it's up, it lags. For 10 months, it's trailed AMD and Broadcom. Honestly, today's gain was worse than both. It's frustrating. I'm now an Nvidia bear, expecting it to plunge for 10 months before any rally. It's cost me so much while still underperforming. On April 8th, the US stock market and Iran officially paused their negotiations. I called my best buddy, Shuangfei, who's my closest friend. We met back at MIT, and later he worked on Wall Street. He's also an incredibly skilled US stock investor. His voice was trembling with excitement. He told me, confidently and assuredly, that US stocks were about to surge. Bye-bye. My. So I went all in on April 8th. Right before the market closed, I went all in with $220,000 and bought 429 contracts of Nvidia $180 call options expiring April 15th at a price of $5.20 each. At that time, Nvidia's stock price was around $183.50, which means I was betting $1.70 per contract on time value, wagering that Nvidia would keep rising this week. My trading logic has 2 dimensions. The first is the macro perspective, world peace. Iran and the US have signed a ceasefire agreement, which means all the hedge funds will unwind their short and hedged positions. Shorts will cover, and there could even be a short squeeze, while the bulls will use this news to push stock prices even higher. As a heavyweight stock with a 7.5% S&P 500 weight, for every $100 invested, $7.50 go to Nvidia. Given this opportunity, I'll follow the trend using only single-leg options. I don't use any combination strategies. The second aspect is the principle of selling options. From the perspective of the selling options principle, the top 6 options are all call options. Except for the ones after 190, all the others will be exercised. Once the stock price exceeds 185, if a gamma squeeze happens, it could shoot straight up to 187.5. You have to understand that this kind of option structure is very rare. In the past, for Nvidia's weekly options, the top 6 were never all call options. It was usually a mix of puts and calls, which would lead to options being sold off, not a gamma squeeze. But this week is different. The top 6 options by open interest are all call options, which makes me think a gamma squeeze is very likely to happen. What is a gamma squeeze? If you're a market maker and you're facing retail investors and institutions buying such a huge number of call options and the stock price keeps going up, what would you do? That's right, you'd have no choice but to buy a large amount of the underlying stock to hedge your risk, which in turn pushes the stock price even higher. As the stock price rises, out-of-the-money options become in the money, and the gamma, the second derivative of the option price, suddenly increases sharply. Market makers then have to accelerate their buying of even more shares to maintain their hedge, creating a vicious cycle of buying, price increases, and even more buying. This is the gamma squeeze, a financial battle involving retail investors, institutions, and market makers all at once. And if you look at the current option structure, the top 6 strike prices range from 180, 182.5, 185, up to 190. This setup is naturally favorable for a gamma squeeze to occur. If Nvidia breaks above 180, the options at that strike could trigger a gamma squeeze. In that case, market makers will be forced to buy shares, pushing the stock price higher. When the price rises to 182.5, a second gamma squeeze will occur, and market makers will again be forced to buy more shares, further driving up the price. Then, when the price reaches 185, a third gamma squeeze will happen. Market makers will have no choice but to buy even more shares, causing the stock price to keep climbing. When it hits 187.5, another gamma squeeze is triggered. But things are different at 187.5. The number of calls at this strike price isn't as high as at the previous strikes. It only ranks 9th, not in the top 6. So the gamma squeeze at 187.5 will be weaker, and market makers will buy fewer shares. So it's not enough to keep pushing through to 190, and instead the price gets stuck just above 187.5. That's why I was able to predict on Wednesday that Nvidia's stock would close near 187.5. And today, when the market closed, Nvidia finished at 188.74, exactly as I reasoned, above 187.5 but below 190. I shared this prediction and logic with my global followers. This wasn't luck or coincidence. It stems from our trend judgment, market interpretation, and psychological analysis, leading to that inevitable result. Let's remember this moment, not just the number, but the fact that we were able to so clearly feel Nvidia's heartbeat. In the end, on Friday, just as I predicted, Nvidia surpassed 187.5 and triggered a gamma squeeze. And right at the peak after the gamma squeeze, I closed out this options trade for a win. You can see my cost was $5.20 to buy in, and I sold at $7.65 for a return of 47%. My account finally reached $328,000. In a way, $328,000 is enough for you to live in a small city, to live a financially free life. Money itself is just a number. It only truly has value when we give it meaning in our lives. You can tell me in the comments how much you need to make from trading to feel satisfied. Of course, that's not enough. We'll definitely keep trading live, because I believe there will be plenty more opportunities this year. This is a big year for IPOs. OpenAI, SpaceX, and Anthropic are all going public. For regular people like us, this is a huge opportunity. Let's seize these opportunities together. They all want to see me lose, but I insist on winning right in front of them. Every video's comment section has people hoping I'll blow up my account, wanting to see how embarrassing it would be if I didn't win. But I guess they'll never get to find out. From April 6 to 10, I turned a $100,000 trial account into $280,000. Then April 13 to 17, I went all in with that $280,000, buying 1,800 NVIDIA 185/187.5 call vertical spreads, betting NVIDIA would close above 187.5 by Friday. In my trading strategy, there are two reasons for going long. The first is my assessment of the international situation. Early Monday morning on April 13th, the Persian side deleted a post they had previously made. The post basically said that they would rather die than agree to compromise on the 3 excessive demands made by the United States. So what does it mean when such a post gets deleted? Consider last week's lesson. The US sought a ceasefire with Persia. Initially, Persia vowed never to agree, but by morning, they deleted their refusal. That same evening, they officially announced a ceasefire and began talks. Given this track record, I think you need to approach international affairs the way you would a romantic relationship. Deleting posts shows indecision. Over-denial often means the opposite, and toughness is just a facade. To me, Persia's deletion makes her look like someone who breaks up in anger, then deletes the post hoping to reconcile. I figured Persia would sign a peace deal. Sure enough, hours later, Persia agreed to drop enriched uranium and stop nuclear research. Using my unique relationship analysis method, I predicted Iran's compromise and went long early. My call was spot on. Second, I saw NVIDIA's options distribution this week matching last week. The top 6 open interests were calls, from 185 to 200. So let's first review and refresh our memory by looking back at last week's NVIDIA option structure and my thought process behind my judgment. Based on the principle of option killing, all of the top 6 options are call options. Except for the 190 call, the rest will trigger a gamma squeeze as soon as the stock price exceeds 185, shooting straight up to 187.5. You have to understand, this kind of option structure is very rare to see. In the past, for NVIDIA's weekly options, it was basically impossible for the top 6 to all be call options. Usually it was a mix of puts and calls, which would lead to option killing rather than a gamma squeeze. But this week is different. The top 6 options by open interest are all call options, which is why I believe a gamma squeeze is going to happen. A gamma squeeze. What is a gamma squeeze? If you're a market maker and you're facing retail investors and institutions buying such a huge number of call options while the stock price keeps rising, what would you do? That's right. You'd have no choice but to buy a large amount of the underlying stock to hedge your risk, which in turn pushes the stock price even higher. As the stock price rises, out-of-the-money options become in the money, and the gamma of the options, that is the second derivative of the option price, increases sharply. Market makers then have to accelerate their buying of even more of the underlying stock to maintain their hedge, creating a vicious cycle of buying that drives prices even higher, which leads to more buying. And this is what's called a gamma squeeze, a financial battle involving retail investors, institutions, and market makers all at once. And if you look at the option structure this time, the top 6 strike prices are 180, 182.5, 185 up to 190. This setup naturally favors the occurrence of a gamma squeeze. Suppose NVIDIA breaks above 180, then the 180 strike options will trigger a gamma squeeze, forcing market makers to buy shares and push the stock price higher. When the price rises to 182.5, a second gamma squeeze will occur, and market makers will again be forced to buy more shares, driving the price up even further. And when the stock price climbs to 185, a third gamma squeeze will happen, forcing market makers to buy even more shares, which pushes the price up to 187.5, triggering yet another gamma squeeze. But things are different at 187.5. The number of calls at 187.5 isn't as high as at the previous strikes. It doesn't even make the top 6, only ranking 9th. So the gamma squeeze at 187.5 will be weaker, and market makers will buy fewer shares. That means it's not enough to keep breaking through to 190, and instead, the price will get stuck just above 187.5. That's why I was able to predict on Wednesday that NVIDIA's stock price would close around 187.5 on Friday. And sure enough, when the market closed today, NVIDIA finished at 188.74, exactly as I reasoned, above 187.5 but below 190. So this week, using the same method, we can deduce that NVIDIA will experience another gamma squeeze just like last week, with market makers being forced to buy more shares, which will keep driving the price up. This is the entire trading logic behind my full position in NVIDIA bullish vertical spread strategy. The killing options principle and the relationship analysis method are trading systems I developed through countless bloody battles in the market. You can find this killing options instructional video on my homepage. It's my only paid tutorial where I teach the method for determining option killing points without holding anything back. Definitely worth learning. I have absolute faith in my trading system, and it's through this system that I deduce both the Iran compromise and the gamma squeeze conclusions. So since both the fundamentals and technicals are all positive, of course I went all in with $280,000 for a full force long position. And in the end, the stock price movement matched my prediction exactly. Nvidia surged all the way to 199 through a gamma squeeze, and that's where I chose to take profit on my vertical call strategy. I bought into the vertical call spread strategy in batches at 1.8 and 1.9 and finally sold at 2.45 to take profit, capturing the maximum gain with a 33% return. As a result, my account hit an all-time high of $440,000. You don't have to envy how much I've made. Now I've truly found enlightenment. But what you don't know is, before I found enlightenment, I blew up my account 3 times. And even after that, I blew up once more before achieving what I have today. If someone can survive by trading, you don't need to ask how smart they are, nor should you envy how much money they've made. You just need to understand that this person has endured a kind of loneliness most people can't handle and has withstood pain that others can't even imagine. He has to see through human nature and, more importantly, challenge himself. Because trading doesn't reward the smart. It only rewards those who can endure, who can be patient, and who can change. It's not that he's just lucky, it's that he's died 1,000 deaths in places no one can see. The fastest way to grow is to grit your teeth and push forward. Every opportunity in life is hidden within your fears. Even if your hands and feet are shaking, you still have to go for it. You can move forward even while you're afraid, because true courage isn't being fearless, it's moving ahead despite your fear. By now, are you thinking that this week is over? That I'd be satisfied with $440,000 and happily go celebrate? Wrong! Wrong! A Bao lives by 2 rules. Hunger brings clarity, and folly brings courage. Stay hungry, stay foolish. Post-US-Iran deal, fundamentals improved. After Nvidia profits, I found a better play, Oracle, which was undervalued. Not long ago, Oracle went through a sharp sell-off, and a lot of short-term capital fled in a hurry. Why? On the surface, Wall Street gave some very high-sounding reasons. First, they think it's getting old, and its traditional database business is slowing down. Second, the quarterly revenue from its cloud business and the financial report didn't meet the expectations of some institutions. Third, and most importantly, in order to seize the AI high ground, Oracle has been pouring money into building data centers, causing its capital expenditures to soar and putting short-term profits under pressure. Those short-term Wall Street investors who only look at quarterly reports lost patience the moment they saw profits thinning. But that's just the short-sightedness of the capital markets. They see Oracle's strategic investments for the next decade as a short-term financial burden. But in my view, this isn't a decline, it's a deep squat before a leap. The market's misjudgment of Oracle is a clear mistake, and this is exactly the once-in-a-lifetime opportunity I've been waiting for to earn excess returns. Putting aside short-term sentiment, let's take a look at Oracle's long-term fundamentals. First of all, Oracle's second-generation cloud infrastructure, OCI, has an outstanding network performance advantage when it comes to running large AI models. Even Musk's xAI is snapping up their services, and both Microsoft and Nvidia are deeply tied to Oracle. Second, Oracle's order backlog is massive. Beyond current revenue, consider its RPO, contracted revenue not yet recognized. This has been hitting record highs. The money is secured, it's just recognized over time. But regardless of fundamentals, bad timing can still leave you stuck. So what gave me the confidence to accurately seize this two-way reversal opportunity right when everyone else was panicking? Longtime followers know that I never rely on blindly guessing the bottom when I trade. I only trust the real signals given by the market. Take a look at this chart. After a series of declines and shakeouts, when market sentiment hit rock bottom, a textbook-level reversal signal appeared on the candlestick chart. A bullish engulfing pattern, bullish engulfing. A strong bullish candlestick shot up, with its real body completely engulfing the previous day's bearish candle. What does this mean in technical analysis? Bearish momentum is exhausted. Major funds are aggressively buying shares, taking back control. When fundamental undervaluation meets a technical bullish engulfing pattern, this rare entry point appears only a few times annually. I jumped in then, and current profits prove I was right. When capital misjudges and sells off, that's the best entry for retail. When Wall Street dumps their shares, we use technicals to snipe them. This bear to bull reversal is where the most profit lies. Seeing the bullish engulfing signal, I watched Oracle. At the price of 153, I was the first to shout out the slogan, Oracle 153, the lowest in the universe, to all my fans in the group. I was selfless. Seeing the entry, I alerted the group, letting them enter before me. After taking profits from my vertical call strategy on NVIDIA, I used all $440,000 in profits to buy nearly 2,000 Oracle call options at a cost of $2.23 each, entering after the group members. Although I waited for the bullish engulfing candlestick signal before entering and missed out on that huge bullish candle, I still decisively chased the rally, went all in with my entire position, and bet big, because I judged that the reversal trend had already been established and wouldn't end in just one day. The upward trend would continue. In Texas Hold'em, there are a few terms. All in means betting all your chips at once, and nice fold means making a rational, though regretful, decision to fold. But the term I appreciate even more is hero call. It means calling a bet even when you know there's risk, yet you still choose to go for it with conviction. I believe there's only one kind of heroism in this world. After seeing the truth about trading, you still choose to love it. On Thursday, Oracle shot up out of nowhere, jumping 6% and reaching a high at 180. I took profits at the intraday high, selling the call options I bought at 2.23 for 4.5. That's a 102% return, and my account has reached 880,000, just one step away from my 1 million goal. Guys, the live trading will wrap up next week. Right now, my feelings are actually pretty mixed, but I still want to say this: failure isn't scary. The scary part is losing the courage to get back up after you fall. I can lose to anyone, but the one person I absolutely can't lose to is myself. Life is like a play, and I want to try to become the main character in my own story. But before I can take center stage, no one knows how many nights I've stayed up, how many harsh words I've swallowed, how many winding roads I've walked that no one understood, or how many times I've held on despite being laughed at. The moments when my choices were denied and my dreams shattered by reality all eventually become the foreshadowing before the spotlight shines on me. The real main character is never some god or demon. It's me, Paint or Bow. Welcome to the final episode of the 100,000 to 1 million live trading challenge. Space Mobile is the name standing at the crossroads in a coming era of space battles. Its ultimate goal is to eliminate all mobile network dead zones worldwide, allowing ordinary smartphones to connect directly to satellite broadband without any hardware modifications. It's going to build a massive base station in outer space, so even if you're out on the waves of the Pacific or in the middle of a deserted wilderness, the sky above you can deliver a full 5G signal. My connection with this company began when its stock was at 3 yuan. As for 30 yuan, well, that's right, I sold too early. But maybe it was exactly because that farewell was so rushed that I couldn't stop thinking about it and wanted to pick up where I left off. Now, taking advantage of the momentum from SpaceX's IPO in June, I've decided to make my final test trade. I'm dedicating it to AST Space Mobile. The trade will first pick the right target, then find an entry point. You need to see why I'm long on AST Space Mobile. First, it's bottom fishing. I believe the recent drop stems from short-term negative sentiment and unfavorable trading mechanisms. The long-term fundamentals remain unaffected. The second reason is that SpaceX is expected to go public around June, which will bring even more catalysts to the space sector and attract more capital inflows. Please keep these 2 points in mind. I'll elaborate on them later. For now, just make sure you understand them. With clear logic and a great entry point, I didn't hesitate. On May 10th, right before Q1 earnings, I publicly announced my buy. This is my life's biggest investment, and I'm betting everything. After the May 11th close, AST Space Mobile reported. Revenue and EPS missed, and the stock plunged. Just like with Meta, I was again the internet's laughingstock. It seemed like everything was telling me I had made the wrong decision, but how could I give up so easily? If fate is testing me at my final chapter, then I'll burn my own corpse for fuel and find new life in the face of death.
Most of you have no idea about the underlying logic behind my long positions. No matter how clearly I explain it, you only believe what you see, only trust what you already believe. You try to measure a world beyond your understanding with your own limited perspective and ignorance. To those who look down on me, I want to say thank you, because your lack of approval only makes me more certain that I'm right. Let's start by combining technical analysis to explain how I determine this bottom. Here, the indicator I'm using, let me first give a quick explanation for those who aren't familiar with it, is the KDJ. And how exactly should you read it? Take a look at the 3 lines at the bottom of my chart, the ones that move up and down like waves. Those are the KDJ indicator. You can think of it as a mood chart and an energy gauge for a stock. Among them, the purple J line is the most sensitive and reacts the fastest to changes in stock price direction. The blue K line has medium sensitivity, and the D line is the slowest but also the most stable. When it comes to using KDJ, you really just need to remember 4 words: oversold and golden cross. Next, let's look at a real example with ASTs. Focus your attention on the chart, specifically the period from early May to mid-May. The first step is to look for oversold conditions. You'll notice that during this earlier pullback, all 3 KDJ lines dropped sharply together. All of them dropped to the very bottom, which is the area below 20. In technical analysis, this area is called the oversold zone. What does that mean? It means that most of the panic selling in the market has already happened. The bear strength has pretty much been exhausted, and the stock price is starting to have trouble falling any further. Using it is like a spring that's been compressed to its limit, ready to bounce back at any moment. And then the most crucial signal appeared. On May 7th, the fastest moving black line, also known as Jason, suddenly turned upward and forcefully broke through the blue line and the orange line from below. In technical analysis, this move is called a bullish crossover at a different position. And in the KDJ system, a bullish crossover at a low position is usually considered a very strong bullish signal. If you look at the chart, after the crossover formed, didn't the 3 lines start to spread upward at a very steep angle? This often means that a lot of bullish capital is quickly entering the market, and the upward momentum is starting to strengthen significantly. On the news front, a week ago on May 14th, CNBC reported that SpaceX's prospectus would be released during the week of May 18th to May 24th, and along with this news, there was also unusual activity in the capital flows, with a large amount of money pouring into the space sector, getting in early to take positions. With the release of the prospectus and the subsequent IPO, the space sector will continue to attract attention thanks to ongoing news coverage. As for the 3 giants of the space sector, they'll be closely tied to SpaceX and Rocket Lab, sharing in both the successes and the setbacks together. Looking at the macro structure options, I noticed that ASTS's options trading volume has surged, ranking 12th among all US stocks, right alongside Amazon, Microsoft, and AMD. And you have to realize, ASTS is just a small cap company, yet its options volume is on par with these giants. This shows that a large amount of capital is betting on ASTS through options. And if we look at the put-call ratio, we'll see that among the top 13 stocks with the lowest ratios, the put-call ratios are all between 0.3 and 0.9, while AST's put-call ratio is just 0.22. This means there are very few puts and a lot of calls. Almost all the options in the market are bullish calls. This brings a lot of upward momentum and the possibility of a gamma squeeze. After analyzing the macro option structure, I also found from the micro option structure that the 105 calls and the 100 calls are overwhelmingly dominant, each with over 10,000 open interest contracts. This means that as the stock price approaches 100, there could be a sudden move. During a gamma squeeze, market makers are forced to buy more shares to hedge, which further pushes the stock price up. On Thursday, I predicted a gamma squeeze would happen, and on Friday, the stock price indeed experienced a gamma squeeze, first breaking 100 and then 105. It reached 105.86. From news, fundamentals, technicals, and all 7 aspects, I found bullish signals resonating together. That's why I went all in on AST this week. As for why I chose to do single leg calls, this week is the final battle of my live trading challenge. Forget envy. It's about the decisive move. It's not quitting, but locking in a single leg hero call. Only this strategy is truly heroic. Like a hero, I ignore the petty and raise my fist to the heavens. Now, for the final part, let's start deriving the fair value of ASTS. First, the underlying logic of valuation is market space. According to the S1 filing released by Musk's ASX this Wednesday, Starlink's potential global market size is as high as $740 billion. What does this mean? This is the total of the global population, hundreds of millions, without ground signal coverage, plus the aviation, maritime, and military emergency sectors. In this field, due to technological barriers and exclusive frequency bands, a natural duopoly is formed. So let's assume that by leveraging early partnerships with dozens of other top global telecom operators, we capture half of the market share, that is, a 50% market share. Taking Starlink as a benchmark, that's a $740 billion pie multiplied by 50%. That equals $370 billion. That's ASTS's peak annual revenue. Is this reasonable? China Mobile alone exceeds $140 billion, and ASTS operates globally, so $370 billion is justifiable. Regarding profits, crucially, once satellites launch, maintenance is minimal, making it a space-based money printer. The CEO of ASDS once said that in the future, the gross profit margin could reach 90%. Of course, we can't take that at face value, so let's be a bit more conservative and set it at 75%. After deducting later stage operating expenses, R&D, and depreciation, its ultimate profit margin can steadily sit at around 50%. $370 billion revenue at a 50% margin is $185 billion in net profit annually. For context, Apple, the world's top earner, makes about $100 billion a year. This means its mature earning power will be nearly twice as much as Apple's current profits. Now, some people might ask, if it makes that much money, how much will the capital market be willing to value it at? For a global monopoly in hard tech with high profit margins and a strong moat like this, let's look at the current PE ratios for reference. On Wall Street, mature firms usually get a PE ratio of 20 to 30, which isn't even high for US tech. $185 billion in net profit times a PE at 20 equals $3.7 trillion in market cap. Sounds like a dream, right? Hold on, let's first add in the most critical variable, dilution from stock options. I expect ASTs will issue shares to fund satellite launches, diluting existing stock. AST currently has under 400 million shares, but to deploy Bluebirds worldwide, it must continue issuing shares to raise capital. Assume an aggressive scenario where shares balloon 2.5 times, from 400 million to 1 billion. We'll divide the $3.7 trillion projected market cap by this diluted 1 billion share total. 3.7 trillion market cap divided by 1 billion shares equals $3,700 per share. Did you catch that? Even if I factor in the most extreme share dilution, the calculated share price is still $3,700. That's why, when I invest, I always make decisions based on real data. As a Wall Street analyst, our financial models are rigorous. That $3,700 share price is no random guess. It's the direct result of the space age and its dividends. But if you don't believe it, it doesn't matter. Time will prove everything. In Texas Hold'em, there are few terms. All in means betting everything at once, and nice fold means making a rational, though regretful, decision to fold. But the term I appreciate even more is call. It's the backbone of making a firm choice, even when you know there's risk. I believe there's only one kind of heroism in this world, knowing the risks, yet still pressing forward with unwavering determination. Success requires courage. This week, I went all in on ASTS calls, taking my account from 880K to 1.35 million, a hero call for my live trading challenge. I achieved the perfect ending, and I also helped the 18,000 members in my fan group, letting them earn their first bucket of gold in life. Has the name Jinhua Erjiabo, the AST godfather, also become, in your heart, the bravest one? The hero who can give you strength in the face of adversity in the future? Turning $4,000 into $1.35 million, I proved small capital can grow huge in stocks and change your life. I started social media to show another possibility, a path without relying on parents or a 9-to-9 grind. Instead, by relying on your own knowledge and skills, you can gradually achieve self-sufficiency and financial independence in the stock market, eventually reaching financial freedom. I sincerely hope that every one of my followers can have this kind of possibility. Looking back at all the hardships and obstacles along the way, especially during those low points, I started to learn to enjoy being alone, and I began to appreciate failure because setbacks make my blood boil and pain only fuels my fighting spirit. I believe that not a single step in my life has been taken in vain. In fact, the vast majority of success comes from enduring countless hardships and persevering through them. Every true seeker of enlightenment has gone through a period filled with torment, loneliness, confusion, fear, hardship, and feeling wronged. But it is precisely in these darkest days, with all these negative emotions and the constant experience of pain, that pain forced my rebirth, breaking and rebuilding me to rise from ordinary to great. This $4,000 to $1 million trading challenge hit $1.35 million, a 337x return. Money is just a number. It only gains meaning when we give it significance. That's when it truly has real value. I won't keep gambling with this money anymore. I want to withdraw it and enjoy life. I believe the highest state of life is actually to earn enough money as early as possible, then step away from the hustle and bustle and go do what you really want to do. No longer troubled by money, no need to struggle with life, just living each day in a way that feels comfortable to me. That's the most enjoyable way to live. And taking this opportunity, I also want to say goodbye to all of you who have accompanied me throughout the Real Shot series. With this, the series officially comes to an end. There won't be a sequel, nor will it restart. But please believe, not every farewell means a true departure. It's just a journey, quietly tucked away into our shared memories.